Fine. Right. So what exactly we are going to cover? So no more delay further. Let us directly jump into the discussion. I don't want to waste any of your time. And let me tell you well in advance, this is going to be a long session. It's not going to be some short session because we have to cover many number of standards. Much content is there. So much of content is there which we are all required to cover. So that's why it's going to be a long session. Please be prepared for that. So in between, if the session is going on beyond a certain limit of time, I will give you break as well. In between break also will be provided. So be here, stay with me till the end. Definitely, I promise you one thing from my side, this will definitely be a value addition in your preparation. Definitely you are going to get good marks if you could spend that 2-3 hours of time on this. So stay connected with me. Don't get deviated or distracted. As I've told, in case if the session is going on for a very long period of time, I will definitely give the breaks also in between. Please be prepared. Right. So sir, what exactly we are going to cover as a part of this revision, as a part of this particular live session? What and all we are going to cover? See, standards on auditing we are going to cover. But when I say standards on auditing is not just restricted only to this chapter. Standards on auditing related content is not just restricted in this particular chapter. See, whatever mainly 90% of our syllabus, 80 to 90% of the syllabus, whatever we have covered as a part of our CA inter level, each and every chapter, in most of the chapters, all that has been taken from standards only. Like for example, when we have covered nature, objective and scope of audit chapter, there it is nothing but the content has been taken from SA 200. Ethics and the terms of engagement, that chapter has been taken from the SA 210. Audit documentation and evidence, SA 230, SA 500. So like that, risk assessment and internal control, SA 315. So like that, majority of the chapters, whatever are there as a part of the CA inter audit, mostly they are also referring to the standards only. Now, what is this dedicated chapter standards on auditing is? I have identified all those standards which are not covered in any dedicated chapter. We have identified all the standards which are not exclusively covered in any other chapter. Those all we have kept it under one head, standards on auditing, and that's what this chapter will be all about. But don't be of a wrong notion that these are the only standards which are applicable. Whatever we are going to cover in this particular chapter, these are the only standards which are applicable for your exam. No. Which are there in your syllabus? No, because entire so many standards are there. As you could see here, there are so many standards which are already covered in other chapters. So whatever standards are there which are not exclusively covered in any chapter, that itself we are separating it and we are including in this chapter, standards on auditing. Okay, so that list you will be able to see here, like I said, 220, 260, 265, 450, 501, 505, 510, 550, 560, 570, 580, 580, 610, 710, and SQC1. So these are all the standards which we have to have a dedicated discussion. But before that, let us try to have one quick recap of the introduction part, the standard setting process, what and all are the different kinds of standards, different kinds of engagements. So this we have to remember it, this we have to recollect it. Why? Because often in the examination they ask a question from this introduction part also. So whatever introduction part I'm going to reverse now, there are many attempts where they have asked the question not directly from the standards, they have asked the question from this introduction part alone. Okay, so let us try to have a quick look at it. Sir, who will issue the standards on auditing? So there is an Auditing and Assurance Standards Board. So we have our regulating authority, ICI. So that ICI, they have created an Auditing and Assurance Standards Board. And this Auditing and Assurance Standards Board, they will issue standards on auditing and other related matters, standards on auditing and assurance related matters. Sir, what and all standards they have given? What and all different kinds of standards they have given? They have given 5 categories of standards. If I have to divide the standards which are given by Auditing and Assurance Standards Board, I can divide all that standards into 5 different categories. First one, we have something called standards on auditing. First one, we have something called standards on auditing. Sir, what are these standards on auditing? When they will become applicable? See, as a chartered accountant, we do multiple kinds of engagement. But in case, if we are conducting audit of historical financial information, which information? If we are conducting an audit engagement, that too of historical financial information, then we are required to complete that audit engagement. We are required to complete that reasonable assurance engagement. As we all are aware, audit is going to be a reasonable assurance engagement. So whenever we are conducting an audit of an audit engagement we are doing, we are required to obtain reasonable assurance. And whenever you are doing such audit engagement, you will be required to comply with the requirements of standards on auditing. SCS will become applicable whenever you are conducting audit of historical financial information. And there are various matters on which the standards have been given, like 100 to 199. This series is reserved for introductory matters. Under that, we don't have any standard. Then we have 200 series, 300 series, 500 series, 600 series, 700 series, 800 series. So each series of the standards will be talking about different aspects which are all connected with the audit. Then, sir, being a chartered accountant, does that mean we always do only audit engagements? Don't we do any other engagements? No. As a chartered accountant, we need not restrict our scope only with audit. As a part of our practical exposure, we do different other kinds of engagements also. So apart from audit, one more engagement what we do is something called review engagement we will do. Sometimes we chartered accountants will be called upon to do an engagement called review engagement. So whenever you are conducting a review engagement of once again historical financial information, see, audit SCAs also will become applicable. Standards on auditing is also applicable when we are conducting audit of historical financial information. On the other hand, if we have been engaged to conduct review of historical financial information, if we are appointed to do something called a review engagement, then also we are required to do such review engagements as per some standards. Those standards we call them as standards on review engagements, denominated with the mnemonic SRE. So what is the full form of this SRE? SRE stands for Standards on Review Engagement. Now you will get it out. Sir, what is the difference between audit and review? What is the difference between audit and review? Let us see here. Audit is a reasonable assurance engagement. What is an audit? What kind of engagement audit is? Audit is a reasonable assurance engagement. We already know what is reasonable assurance. Reasonable assurance is a very high level of assurance, but not an absolute assurance. Whereas review engagement is something which we call it as limited assurance engagement. Review engagement is what kind of engagement? Limited assurance. Sir, what is limited assurance? Which is even lesser than the reasonable assurance. See, absolute assurance is the highest level of assurance. Absolute assurance is the highest level of assurance. In audit, we don't give absolute assurance. What we give? Reasonable assurance. Now, in engagement called review engagement, we will not even give reasonable assurance. Our engagement is even far less than the reasonable assurance. We give some other kind of assurance which we actually call it as limited assurance. So review engagement is such an engagement where we will give limited assurance. So reasonable assurance provides high level of assurance, whereas limited assurance provide lower level of assurance than when compared with the reasonable assurance. And in audit, we perform elaborate and extensive audit procedures. In-depth audit procedures we are going to perform. So we are going to perform elaborate and extensive audit procedures where in audit. Whereas when it comes to review, we perform very fewer procedures. That means limited procedures we are going to perform. We are not going to perform in-depth audit procedures. Limited procedures we will be performing. Next. Here, we draw reasonable conclusions on the basis of sufficient and appropriate audit evidence. In case of audit, we draw reasonable conclusions on the basis of sufficient and appropriate audits. Whereas it involves, which means review engagement involves obtaining sufficient and appropriate audit evidence where we draw limited conclusions only. So in audit, we draw reasonable conclusions, whereas in review, we draw limited conclusions. And examples, audit engagement for reasonable assurance, we have audit engagement. For limited assurance, we have the review engagement. So this difference is important. So as I have told you here, two categories of the standards till now. Now, if you pay close attention here, in audit also, we are concerned with historical financial information. In review also, we are concerned with historical financial information only. Sir, as a chartered accountant, do we do all engagements relating to historical financial information only? Do we do always our work? See, we do professional work. Do you think as a chartered accountant, will we always do our professional work associated with historical financial information? Need not be. Sometimes a client might approach us asking us to work on something other than historical financial information. A client might approach us to do some work which is associated with other than historical financial information. Sir, what do you mean by other than historical financial information? When I say other than historical financial information, it could be non-financial information. It could be non-financial information, or it could be a future financial information. So sometimes the clients will engage us asking us to do some engagements which are not historical financial information, which are not related to historical financial information. Sometimes we might be required to work on other than historical financial information. When I say other than historical financial information, what actually I am referring to? Other than historical financial information could refer to non-financial information. Sometimes a client might ask you to work on some other than financial information. A client is asking you to verify internal controls and give a report on it. That is not a financial information, other than financial information. Or sometimes client might approach you asking you to do some future financial information, prospective financial information also we call it. What do we call it? Prospective financial information we call it. So we might be required to work on projections. We might be required to work on some estimations. So in those cases also we have some standards for our guidance, which we call it as the standards on assurance engagements. So in that cases we have some standards called standards on assurance engagements, and when particularly they will come into picture. So standards on assurance engagement will become applicable when we are associated with other than historical financial information, which could be a non-financial information, which could even be a future financial information. And then finally, see, if you pay a close attention here, even in audit, in review, in assurance, everywhere we are doing verification work. In audit also we do some sort of verification, review also we do some verification, assurance also we do some verification. Sir, what is this, sir? Chartered accountant's job is very boring. Will he do only verification? No, my dear students, he will not do only verification. Sometimes you will perform even agreed upon procedures also. What you do, you perform something called agreed upon procedures. Sir, what do you mean by agreed upon procedures? Instead of verification, you will agree with your client to perform some procedures, and that procedures you will perform. Let us say a client has approached me asking me to do the compilation of the financial statements. He's not asking me to do the audit. He came to me and told, sir, I will give you my books of accounts. I have maintained my books. I will give you that books of accounts. From that books of accounts, you please prepare the financial statements as per schedule 3 format so that I can finalize it and I will get it audited by my auditor, and thereafter I will get it audited by my auditor, and thereafter I will issue that financial statements to the common public, sir. So like that, some people might approach you asking you to do agreed upon procedures. So like that, if a client is coming to you and asking you to perform some agreed upon procedures, even for that agreed upon procedures also we have to follow some professional standards, and those professional standards we are going to call them as standards on related services, SRS we call them. So here we have standards on related services, sir. When they will become applicable? When we are doing when we are required to perform agreed upon procedures like compilation engagements, etc. Okay, so like this, broadly with this I have told you that different kinds of engagements you will do. You will do audit engagement, you will do review engagement, you will do assurance engagements, you will also perform related services. Now whenever you are doing any of the engagement as a chartered accountant, whenever you are doing any of this professional engagement, be it audit, be it review, be it assurance, be it agreed upon procedure, there is a requirement for maintaining quality. So there is a requirement for maintaining of quality in all the in all the engagements we are doing, not just audit. So whatever engagement we are doing, be it audit, be it review, be it assurance, be it related services, in all the engagements we are required to maintain the quality. Sir, how we can maintain the quality? Even for maintaining the quality in our engagements also, we have one dedicated standard talking about it. So we have SQC series to assist us in maintaining the quality of the engagements. We have a dedicated series of standards which we call it as SQC, and under this SQC series we have only one standard, SQC1 we have, which will help us to maintain the quality not just in audit, in all engagements how to maintain the quality. That assistance has been given by SQC, standards on quality control. Clear? Able to understand? That's all. So these are the 5 broad categories of the standards: SAs, SREs, SAS, SRS and SQC. Sir, what we are going to learn at the CA interlevel? At the CA interlevel, we are going to only talk about the standards on audit and SQC1. As a part of our CA inter, the scope of our syllabus when it comes to standards is only standards on audit and SQC1. This only we are going to cover. Whereas SREs, SAEs, SRAs, these all will become applicable as a part of our CA final level, which we will be learning all of them as a part of our CA final level, not now. Clear about it? Now. So one more last paragraph from the introduction I wanted to cover. Thereafter I will go into the standards directly. Right. So here we have what are the duties in relation to engagement and quality control standards. So I told you these are all engagement standards, no? So when they say engagement standards, and one more thing here I forgot to mention, all these 4 standards. Which 4 standards? SAs, SREs, SAE, SRS. These 4 standards collectively we call them as engagement standards. These 4 standards we collectively call them as engagement standards. So when I say engagement standards, I am referring to 4 things. What are the 4 things I am referring to? SAs, SREs, SAEs, SRS. All these 4 standards collectively we call them as engagement standards. Okay. So now these standards are all given by the institute. They have given engagement standards, they have given quality control standards. So as a professional, what is your responsibility? What is your duty with regard to that engagement and quality control standards? So they say that it is our duty to see that standards are followed. What is our primary responsibility with regard to that engagement quality standards and quality engagement and quality control standards? What is your responsibility as a professional accountant? We have to make sure that we are following the standards in whatever engagements we are doing. So these are to be followed by whom? Professional accountants, you and me, not our clients. We are required to follow. However, in some situations, some standard would be ineffective. One particular standard might not be effective for you. Specific procedure in the standard might not be effective for you. Entire standard is applicable, but in that entire standard, one procedure they are specifying, if that procedure in that standard we are unable to do, it is ineffective, then what he can do? He is required to document how you have performed the alternative audit procedure. If the procedure prescribed in the standard is not applicable for you, or is it ineffective, then how you have tackled it. So what alternative procedures you have performed, that you have to document. And reason, in case if you have departed, In case if you have departed from the professional requirements, in case if you have departed from the requirements of the engagement standards and quality control standards, you have to record the reasons, because of what reasons you have departed from the requirements of the standards. That reasons also you have to record it, and you should draw attention to such departures. In your audit report, you have to clearly give reference. Okay, I have departed, and these reasons for the departure I have explained in so and so paragraph. Give references. And it is also to be noted that mere disclosure in the report does not absolve a professional accountant from complying with applicable standards. Does that mean does that mean is it a permission given to me that I can give the disclosure and do the departure? No, it is not some escape route given to you. In extreme circumstances only you try to depart from the requirements of the quality and control standards and professional standards. If at all you are doing it because of extreme circumstances, then give disclosure. It is not an easy way out for you to give the disclosure and don't comply with the standards. Right. So this introduction part, so this part is also important. What are the duties of the professional accountant in relation to engagement and quality control standards? Like that they might frame a question. So many of the people are ignoring on this introduction part, but from this introduction part also questions might come. Please do refer to that introduction part. So since we have understood what is the purpose of the standards, what are the different kinds of standards, and what is the professional responsibility with regard to the standards, now we will go into that particular standard and we'll try to understand one by one. So first I will try to start the revision with my 500 series. I will try to pick my discussion with 500 series. So first we'll try to cover 500 series. Thereafter we will come to 200 series. So like that we will try to finish it off. So first let me come to 500 series. Fine. So let us come to understand SA 501. We will start our discussion with SA 501. Sir, what does SA 501 talk about? SA 501 is a standard which is talking about audit evidence. And if you could see the heading here, they are saying specific considerations for selected items. SA 501 is a standard which is talking about audit evidence, and the heading doesn't just say audit evidence, it is talking about specific considerations for selected items. See, we have SA 500 which is also talking about audit evidence. We have SA 500 which is also talking about audit evidence. SA 501 is also talking about audit evidence, but what is the difference is SA 500 is a general standard talking about overall audit evidence in general. Whereas SA 501 is a standard which is talking about audit evidence, and it will give you special considerations for only 3 selected items. This standard has selected 3 items, and for that 3 items only, how you are supposed to obtain audit evidence. Only for that 3 items they will tell you specific considerations what you are required to keep in mind when you are trying to obtain sufficient and appropriate audit evidence for only selected 3 items. Sir, what are that 3 items which are selected for which SA 501 is going to help us out? Number 1, obtaining evidence regarding existence and condition of inventory. Say I will take the help of the charts wherever necessary. I have this handwritten charts which is very popular among you all. So this assistance I will take wherever necessary. I will take it. So this standard will help you. So what is the purpose of SA 501? This standard will help you to obtain sufficient and appropriate audit evidence in 3 areas, only 3 selected areas. What are they? Existence and condition of inventory. How you can obtain audit evidence regarding existence and condition of inventory, and how to obtain audit evidence regarding completeness of litigations and claims. How to obtain audit evidence regarding presentation of segment information. So these are the 3 aspects which SA 501 is trying to help us out. So first what we will try to do is we will try to understand how the auditor can obtain audit evidence regarding existence and condition of inventory. How you can obtain audit evidence regarding existence and condition of inventory. See, so first aspect which is addressing is to obtain evidence regarding inventory, but this standard will help us to obtain evidence regarding 2 things. One is regarding existence and the other one is regarding condition. Sir, what do you mean by existence? How you determine the inventory value? As we all are aware, in our financial statements, what is one of the main item, especially in manufacturing and trading entities, inventory is there will be an inventory value. How that inventory value will be arrived? There will be some figure, no? How that inventory value will be arrived? That inventory value will be arrived by taking the closing quantity of stock. That quantity you have to multiply. So what is the quantity of the stock? You have to determine as on the balance sheet date. That quantity you have to multiply with cost or NRV, whichever is lower. So if you could multiply the quantity into cost or NRV per unit, whichever is lower, you are going to get that inventory amount. Now you need to obtain evidence regarding this quantity also. Whatever quantity that has been used in the valuation of inventory, is that quantity is correct or not? Is that quantity of stock is really existing or not? So that's what the first aspect. You are required to obtain evidence regarding existence of inventory. And then just having the quantity alone will not be enough. Let us say if they're saying 1 lakh quantity of stock is there, this 1 lakh quantity of stock having is not enough. What is the condition of this stock? What is the condition of the stock? Why? Because condition of the stock is going to have a direct impact on the NRV. condition of the stock is something which is going to determine your NRV. So if you could obtain evidence regarding existence and condition, then definitely inventory valuation will be correct. So now comes the question, sir, how am I supposed to obtain audit evidence regarding existence and condition of inventory? So let us all keep aside what the standard is saying. First, you think and tell me what is the one thing which you can do to obtain evidence regarding existence and condition of inventory. So as you all are aware, you have to go and attend that inventory counting process done by the management. The management of every organization will do the inventory counting. So mostly as on the balance sheet date. So whatever it is, every organization, the management of every company will do the physical verification of their stock. And what SA 501 says is, as an auditor, you should try to attend the physical inventory counting process done by the management. Management will do inventory counting on one specified date and they will call you, and as an auditor, you are supposed to go and attend that management inventory counting process. Sir, by attending there, what I should do? Okay, sir, management will do the physical verification. They will call me. I will go and attend that inventory counting process. By attending there, what I'm supposed to do? Do nothing. What you are supposed to do? Very simple things. So you are required to evaluate management's instructions and procedures for recording and controlling the results of entities' physical inventory counting. So you have to sit there. You have to go and understand. Evaluate means what? You have to understand what process management is following, what instructions they have given for their staff for the purpose of this inventory counting. Go and evaluate, analyze, understand. Then so once you have understood what process management is following, what instructions they have given to their staff for the verification, thereafter observe the performance of management count procedures. First you understand what procedures they are following, what instructions they are following. Thereafter sit there and observe how they are doing that verification. Then inspect the inventory. If you are sitting there doing the observation, then you are feeling bored, don't sit there. Go and inspect the inventory, go and check the inventory, and if suitable, perform the test counts also. If suitable, you pick a few random items and do the test counts. So whatever it is, as an auditor, you are required to go and attend that inventory counting process done by the management and do these 4 steps: evaluate management's procedures and instructions, observe the inventory counting process, inspect the inventory, and then perform the test count. Whatever it is, verify final inventory records to determine whether they match with the quantity or not. That's what the whole purpose of doing physical verification. Whatever quantity which is there in the records, that is matching with the physical quantity or not, that you have to determine. Then, sir, in case if the management is conducting the inventory verification as on the balance sheet date, well and good. If the management is conducting inventory verification as on the balance sheet date only, well and good. Why? Because on that date, whatever stock is there, we'll find out that stock only will get reflected in the financial statements also. But in case management can do inventory verification at a later date also, a few days before, few days after the balance sheet also they can do. Let us say one client is doing the inventory verification on 10th of April. 31st of March, they have to whatever stock which is appearing on 31st of March, that should come in the books. But this management is not able to do the inventory verification on 31st of March. They are doing their inventory verification on 10th of April. So then also you have to go and attend on this 10th of April also, you have to go and attend that inventory counting process. There also you will do all the 4 steps: evaluate, observe, inspect, do the test count. But so whatever it is, by performing that, you will determine what is the stock existing as on 10th of April. But this stock will not come in my balance sheet. No, which stock will come in my balance sheet? As on 31st of March, whatever stock is there, that will come in my balance sheet. So that's why here what we should do, here we have one more step. Once you have determined the stock as on 10th of April is matching, you do reverse calculation. What you do? Reverse calculation. So you take the stock as on 10th of April. To that, you have to add all the sales made from 1st of April till 10th of April. Whatever sales or consumption happened, that you have to add. Whatever purchases that are made from 31st of March to 10th of April, that you have to reduce. Then you will do the reverse calculation and you will arrive at the stock which is there as on 31st of March 2020, 2000 of the respective year. So now, in case if the management is doing inventory verification on other than balance sheet date, don't just stop with verifying the stock as on that date. Even do the audit procedures on the intervening transactions. They say, if you see the terminology here, even you are required to perform audit procedures, whether changes in inventory between the count date and the date of the financial statements. So between the financial statements date and the date of counting, whatever transactions have taken place, that means whatever sales that have taken place, whatever purchases that have taken place, whether they are genuine or not, that also you have to verify. Understood? First point says, in case if you are doing inventory verification as on the balance sheet date, just verify the stock. In case if the management is doing the inventory verification on date other than the balance sheet date, you will do all the steps given in this A point. In addition to that, you have to perform audit procedures on the transactions which have taken place from the date of the financial statements till the date of the counting. Whatever intervening transactions you have that have taken place, on that also you have to extend your audit procedures. Okay, next. Sir, management is doing physical verification. They have even invited me, whether on the balance sheet date or other than the balance sheet date, they are doing the physical verification. They have even invited me, sir, but I'm unable to attend. Why you are unable to attend? Might be I'm busy, I'm occupied, out of town, my team is not available, whatever could be the reason. If the management has conducted physical verification, they have invited you politely, but you are unable to attend that inventory counting process because of some reason, then what will happen? In that case, the standard says, in case if you are unable to attend the inventory counting process, then you go and do the physical verification on test check basis on some alternative date. You did not attend management inventory counting process, no, now you are into trouble. You have to take your team, along with your team, you have to go on some alternative date and try to perform the stock verification on at least test check basis, not on 100% basis, on a test check basis. You have to take your team and go and attend that inventory counting process. Now, whatever it is, whether you are attending management inventory counting process or you are doing the inventory counting process on your own in some alternative date, so what and all are matters that you have to consider? What and all matters you have to consider, whether you are doing verification, whether you are going and attending the inventory counting process, or as an auditor you are going and doing the inventory counting on some alternative date. So at the time of that inventory counting, what are the matters which you have to keep in mind? What matters you have to keep in mind? So what matters you have to consider? Nature of inventory. What is the nature of inventory? If it is work in progress, what is the stages of completion? 10%, 20%, 30%, 50%. What is the stages of completion of work in progress? A risk of material misstatement. So to that inventory, what risk of material misstatement is there? What kind of internal controls the client is having with regard to the inventory? Whether there are adequate procedures to be established and proper instructions are given. Whether for the staff involved in that inventory counting process, proper instructions are given, proper procedures are followed. Timing when that inventory counting is done, and entity, whether entity maintains a perpetual inventory system or periodical inventory system, and location where the inventory is held. Because of that location, is there any risk happening? And also is whether assistance of auditors expert is needed. Sometimes for verifying some kind of stock, we might need the help of an expert. Determine whether any expert's help is needed for doing the inventory verification. Understood. So whatever it is, you attend the management inventory counting process, or if not possible, you try to do the verification on your own and try to consider these matters. Sir, some cases what will happen is, management did the physical verification, they invited me, I am unable to go. I planned to do the inventory verification on some alternative date. That also become highly impracticable, sir. Management did inventory verification, they invited me, I was unable to go. I thought I will do the inventory verification on my own on some alternative date, but because of some unavoidable circumstances, what happened is I am unable to do the inventory verification. So some unavoidable circumstances. Sir, what is that unavoidable circumstances? Time and cost difficulty. Sure, if I have to go to inventory verification, it will take more time. That is impracticability. Can I say that? No. If I have to go for physical verification, I have to incur some cost. I have to incur cap charges. So difficulty of time and cost. Can it be a possible reason for impracticability? No. Time and cost constraint. So the difficulty of time and cost involved is not a reason for impracticability. Even if you are required to spend the time, even if you are required to go and even if you are required to incur the cost, you have to go and attend the inventory counting process. You have to do inventory verification. But it has become impracticable because of some reasons beyond your control, like social riots are happening, some warlike situation is happening, or some calamities are there. That is actually the reason for impracticability. So in case if physical verification becomes highly impracticable, then what will happen? You shall perform alternative audit procedures. What you should do? Alternative audit procedures you have to perform. Sir, what could be alternative audit procedures? It could be anything. Whatever you can think of, try to perform the alternative audit procedures. So if you are unable to attend inventory counting process, try to perform alternative audit procedures. One example, what could be an example of internal alternative audit procedures, sir? Inspection of documentation of the subsequent sales you verify, or do the video call, whatever it is, whatever alternative audit procedures you think of, that you do. Sir, if you are unable to obtain audit evidence even by performing alternative audit procedures also, you said that I am required to perform alternative audit procedures. Sir, if alternative audit procedures are also not possible, sir, I am unable to perform alternative audit procedures also, sir, then what I should do? Modify the opinion. Ultimately, what you can do? Modify the opinion. Sir, which kind of modification I have to give, sir? Which kind of modification? It will be either qualified or disclaimer. Why qualified or disclaimer? Because it is a case of non-availability of audit evidence. You are unable to do physical verification. No. That means you are unable to obtain audit evidence. No. You are unable to perform alternative audit procedures. Still you are unable to obtain audit evidence. So you have to give a modified opinion. Which kind of modified? Either qualified or disclaimer, because it is a case of non-availability of audit evidence. So the matter regarding which you are unable to obtain audit evidence, if it is only material but not pervasive, give qualified. If the inventory is material and pervasive regarding which you are unable to obtain audit evidence, give a disclaimer. Either give a qualified opinion or a disclaimer of opinion. Okay, right. Next, coming to the next point. And as I have told, the difficulty of time or cost involved is not a valid basis for impracticability. And one more last point regarding inventory. Sir, sometimes the inventory is there in the books of your client, but the custody of that inventory is lying with a third party, sir. when you are conducting audit of your client, in the client's books, stock is there. When I asked them, sir, where is this stock? They told that this stock is lying in custody of third party. Could it be possible? Yes, 100% possible. Can the stock be lying in the custody of third party? Yes. When? Consignment basis, goods sent on sale or return basis, job work basis. So in these circumstances, the stock might be lying in the custody of a third party. Sir, do I need to obtain audit evidence for that also? Yes. If that stock which is lying with a third party is material, even for that stock also you are required to obtain audit evidence. But how, sir? How, sir? That this paragraph is trying to help you out. In case if inventory is lying with a third party and that is material for the financial statements, you have to obtain audit evidence. But how? By requesting confirmation from the third party. Try to go for external confirmation. SA 505 to the third party, send an external confirmation, positive confirmation request, negative confirmation request, whatever it is, send the confirmation request, get the external confirmation from the third party, whoever is holding that stock. And also he can perform other audit procedures. In addition to confirmation request, you can also perform inspection or other audit procedures. Like what? You can go and attend the third party premises if suitable, arrange another auditor who will go and verify that stock of the third party, or check the appropriate documentation. Whatever documentation is available for movements which have happened between your client and the third party, verify that documentation. Understood? Clear and comfortable? So this is what regarding how to obtain audit evidence regarding existence and condition of inventory. So this is what one aspect of SA 501 says. Next aspect which SA 501 is helping us out to obtain audit evidence is completeness of litigations and claims. How as an auditor you can obtain audit evidence regarding completeness of litigations and claims. How you can obtain audit evidence regarding completeness of litigations and claims. Sir, what do you mean by completeness of litigations and claims? So management should have disclosed all the litigations and claims in their financial statements. If there is any litigation, if there is any pending claim, if the outcome is certain, they have to show it as a provision. If it is probable, then they have to show it as a contingent liability. So whatever it is, if the client is going through any litigation or claim, it should be either shown as a liability or as a contingent liability. If they are not showing anywhere, that will be a misstatement. So that's what you need to obtain audit evidence. Completeness, whether all the litigations and claims have been disclosed in the financial statements or not, that you have to obtain audit evidence. And how to obtain that audit evidence, what SA 501 says is, first you try to identify, is there any risk of material misstatement? Don't directly jump to find out misstatement. So first what you try to do is you perform audit procedures to identify whether there is any risk of material misstatement. That means whether there is a chance of not completely disclosing the litigations and claims. Is there any risk of material misstatement regarding completeness of litigations and claims? You find out the risk first. Sir, how to find out that risk? So the standard says, so you can identify that risk of material misstatement by doing any of the three steps. How to identify that risk also? Standard is only saying three simple steps. They will say, number one, first go and inquire with the management and in-house legal counsel. Go and inquire with the management. Sir, did you disclose all the litigations and claims? If there is in-house legal team, if there is internal legal team available, go and inquire with them. Sir, if there is in big companies and all, you will be able to find in-house legal team. Go and speak with them. Team of lawyers will be there. Go and speak with them. Sir, have what litigations and claims this client is going through, have they disclosed everything in their financial statements or not? Read the minutes of those charged with garnants. So those charged with garnants meetings, minutes will be there. Go and read that minutes. From that you will get to know what litigations and all have taken place. And also review the legal expenses account when compared with the last year. Do the comparison of the legal expenses account of the current year and the previous year, if there any significant increase or something like that. So like that, first you try to identify risk of material misstatement regarding completeness of litigations and claims. That too by performing three simple steps. What are the three simple steps? Number one, inquire with the management and in-house legal counsel. Read the minutes of those charged with garnants and even review the legal expenses account also. Now, by performing these three steps, two outcomes could be possible. What could be the two outcomes? Number one, yes, you found risk of material misstatement. What do you mean by finding risk of material misstatement? That means you found that there are some litigations and claims which the company is going through, but they have not disclosed that in the financial statements. That risk you have found out, possibility. Not actual misstatement. You found out that there is a possibility that management is going through some litigation claim, but that has not been disclosed in the financial statements. That possibility is there. Risk is identified. Other case, what could be possible? Risk is not there. You inquire with the management, you read the minutes, you reviewed the legal expenses, you found nothing suspicious. So two outcomes could be there. So in case after performing these three steps, number one, if there is no risk of material misstatement, you will stop your audit procedures here only. You will stop your audit procedures with these three steps only. In case if you find out the risk of material misstatement, you will try to proceed ahead and perform the further audit procedures. Clear? That's what is very important here. So once you have, in case if you have identified the risk, then only you will perform the subsequent procedures. What are that subsequent procedures you have to perform in case if you have identified the risk? Number one, auditor shall communicate with entities external legal counsel In case if you find there is a risk of material misstatement, you have to communicate with the entity's external legal counsel. The company will have a external legal counsel. Go and communicate with that entity's external legal counsel. How to communicate, sir? Through a letter of inquiry. How you have to communicate? Through a letter of inquiry. Who will prepare that letter of inquiry? That letter of inquiry should be prepared by the management, because you don't know whom to communicate, how to communicate. So that's why you have to communicate with entity's external legal counsel. But since you don't know whom to communicate, how to communicate, you take the help of the management in drafting that letter of inquiry. So you have to communicate with entity's external legal counsel through a letter of inquiry prepared by the management, sent by the auditor. Pay attention to the words I'm using it here. Prepared by the management and sent by the auditor, asking the external legal counsel to respond back directly to the auditor, not to the management. So what do they say here? This statement is also very important. See here. So he shall do so through a letter of inquiry prepared by management, sent by auditor, representing and requesting entity's legal counsel to communicate directly with the auditor, not with the management. Communicate directly with the auditor only. Okay. Now, see, if everything happens seamlessly, well and good. You asked the management, they drafted a letter of inquiry, you communicated with entity's external legal counsel responded back, well and good. The situation will proceed. But when the obstacle will happen, either management is not permitting you to communicate with the entity's external legal counsel. When the problem will come, let us analyze it. Either management is not permitting you to communicate with the entity's external legal counsel. Number two, management is permitting, but the entity's external legal counsel is not responding back, or he is prohibited from responding. So either management is not letting you to communicate with the entity's external legal counsel, or management communicated but entity's external legal counsel is not responding back. Either he is intentionally not responding back, or he is prohibited from responding by his professional responsibilities. Whatever could be the case, all this could happen. So when any of these things happen because of which you are unable to communicate with entity's external legal counsel, then what you should do? Then the standard says perform alternative audit procedures. What you do? Perform alternative audit procedures. Sir, what could be that alternative procedures? Anything, any alternative audit procedures you try to perform. If you are unable to perform alternative audit procedures, then also you try to modify the opinion. You are unable to obtain audit evidence, then you have to modify your opinion. Here also, which modification? This is also a case of non-availability of audit evidence. Either a qualified opinion or disclaimer of opinion you are required to give. Understood? Now, few more additional points are there which are very important here. Sometimes if you ask a letter of general inquiry, the entity's external legal counsel will not respond. See, when I say entity's external legal counsel, they are not free like you and me. When I say entity's external legal lawyers and all, they are very busy people. They have multiple clients to handle. If you send them a general letter of inquiry, you are asking all kinds of information. If you send a general letter of inquiry, do you think they will respond back to each and every query? No. So that's why when you feel that letter of general inquiry will not be responded back, in that circumstances, what you should do? You should seek communication through a letter of specific inquiry. Be specific in your request. If you in big lawyer offices and all, if you send general inquiry, I want to know these details, the big list you are sending, they will not respond. So if you expect a response, then what you should do is you should send a letter of specific inquiry you have to send. Sir, in that letter of specific inquiry, what I should include? So in that letter of specific inquiry, I should include minimum details like a list of all litigations and claims. First, to make a note of all the litigations and claims you got to know. Then where available, management's assessment of the outcome of each of the identified litigation. So first you identify all the litigations, then you include in that letter of inquiry, sir, for this litigation, management did this assessment. Whether they have treated it as a provision or they have shown it as a contingent liability, what is a management assessment? Give that management assessment also. Then request the entity's external legal counsel, sir, these are the list of litigations, these are the management's assessment. Please confirm, please confirm the reasonableness of the management's assessment. Whatever assessment management has done, is it reasonable or not? Please confirm. So like that, if you are very specific, in case if you are not able to get the response for a general inquiry, you have to send like this specific inquiry where you are asking specific details for which there are more chances for getting a response from the entity's external legal counsel. And what should be the contents of that specific inquiry? List of all the litigations, management's assessment regarding the litigations, and requesting the entity's external legal counsel to confirm the reasonableness of the management's assessment. Clear? Next. And in some cases, as an auditor, you might feel that just communicating with the entity's external legal counsel through letter of inquiry alone will not be enough. You might feel that need and urge to meet and go and directly meet with the entity's external legal counsel. Possible. In some circumstances, you might feel that just communicating with the entity's external legal counsel through a letter of inquiry alone will not be enough. You feel that I have to go and personally meet with the entity's external legal counsel. When that need arises, when that urge will be there. So that need might arise because the auditor has determined that risk to be a significant risk. When you feel that the risk is a significant risk, then you might decide to go and meet with the entity's external legal counsel. or when the matter is very complex, very difficult to understand, or when there is a disagreement between what management is saying or entity's external legal counsel is saying. First, you communicate it through letter of inquiry. Let us say the entity's external legal counsel responded back also, but whatever management is saying, whatever response you got from the entity's external legal counsel, there is a mismatch. To sort it out, you can go and personally meet with the entity's external legal counsel also. So these are the three matters where auditor might feel that instead of communicating through letter of inquiry, it will be required to go and meet with the entity's external legal counsel directly. That could happen in three circumstances: when the risk is a significant risk, when the matter is complex, when there is a disagreement between the management and the entity's external legal counsel. But generally, even to get that meeting done also, you need the management's permission. Generally, lawyers will say we will meet only when you have management permission, and even they will sometimes ask you to bring the representative of the board of directors also. If they have to meet you, they will ask you to bring someone along with you, like some board of director they will ask you to bring. So whatever it is, that formalities you have to fulfill. And in addition to all that, even you have to request written representation. As an auditor, you will perform all the above procedures. In addition to above all audit procedures, even you are required to request that written representations from the management also. Regarding what, sir? So you ask written representation from management and those charged with governance, that all known actual or possible litigations and claims whose effect should have been considered have been actually disclosed to the auditor and have disclosed it as per applicable financial reporting framework. So ask the management to give me a written confirmation that they have disclosed all the litigations and claims to me also, and they have disclosed all the litigations and claims in the financial statements as per applicable financial reporting framework also. So ask the management to give this two written representations. That's all. So this is what regarding how to obtain sufficient and appropriate audit evidence regarding completeness of litigations and claims. Now coming to the third point. Third matter regarding which SA 501 is giving the guidance to obtain sufficient and appropriate audit evidences regarding segment information. Regarding what? Segment information. So some companies are even required to present the segment information in their financial statements. Now you need to obtain audit evidence whether that segment information has been appropriately disclosed. So the auditor shall obtain sufficient and appropriate audit evidence regarding presentation of the segment information in accordance with applicable financial reporting framework. And how you will try to obtain audit evidence regarding presentation of that segment information, sir? Number one, first you try to obtain an understanding of the methods used by the management. First, you ask the management how they are identifying the segments, on what basis they are identifying the segments, what procedure they are following. Go and sit with the management, first understand it. Further, evaluate whether such methods are likely to result in disclosure in accordance with requirements. So once you understood the methods used by the management, then you analyze whatever methods management has followed, will that result in proper disclosure as per applicable financial reporting framework? And also test the application of that methods. Whatever methods management has applied, that you have to test it. And even wherever you can perform analytical procedures, try to perform analytical procedures also. Sir, you are asking me to understand the methods, no? What particularly I have to understand, sir? The first step you told you have to understand the methods used by the management. Sir, what exactly mean by methods? Are there any examples of the matters which I need to understand? When you are asking me to obtain understanding regarding the methods, what are the examples which I need to understand? So that we have it in our second point. So when I ask you to understand the methods used by the management, some of the examples that will be considered relevant when obtaining understanding of the methods is: number one, sales transfers and charges between the segments. So what sales are happening between segments, what transfers have happened, what charges happened, and how they are eliminated, that you have to understand. Comparison with the budgets. So segment wise information you can compare with the budgets, how the assets and costs are allocated, and also whether they are consistently preparing that segment information as per prior period accounting policies or not. Consistency also we have to check. So these are the few examples which you need to consider, which are relevant while understanding the methods used by the management. Clear? So we have successfully completed SA 501. Guys, are you all with me? Just give me one quick confirmation. Are you all with me? I hope you are. So let me try to proceed further with the next standard. Perfect. So the next standard which we'll take up for revision is going to be SA 505. The next standard which we are going to pick up for revision is going to be SA 505, which is dealing about external confirmation. Sir, what is this external confirmation? If you remember the discussion, whatever we had in the audit evidence chapter. So there are various methods which are available for obtaining audit evidence. So in that, one of the method is obtaining external confirmation. In that, one of the method is obtaining external confirmation. So let us try to understand what is this external confirmation, how you can use that as audit evidence. So first of all, what is the meaning of external confirmation? So first we'll have a look at few definitions here. So what is the meaning of external confirmation? So external confirmation means a direct written response. Only written response will have validity. Only written response will be considered as external confirmation. So as an auditor, if you are getting a direct written response, what kind of response? Direct written response. Either that response could be either in paper form or electronic form. Either someone is giving you a written response either by writing it on a piece of paper, or they are sending you in the form of email, whatever it is. If you are getting a direct written response either in paper or electronic form, from whom, sir? Okay, you are getting a direct written response either in paper or electronic form, but from whom, sir? From a third party, whom we also call them as confirming party. Sir, what do you mean by third party here? What do you mean by third party here? Who is not from management, who is not from your client, who is not from your client's organization, who should not be from your client's organization, someone outside of the client's organization, from a third party. If you are getting a direct written response, that we call it as external confirmation. And that third party, whoever is giving that written response, that party we also call them as confirming party. Sometimes in the exam they use the phrase confirming party. Sir, what do you mean by confirming party? Whoever is giving that written response, that person we call him as confirming party. And one more thing here, only written response will be considered as external confirmation. Oral responses will not be considered as external confirmation. Now, these confirmation requests can be of two categories. Whatever confirmation request that you are sending to the third party for which you will get the response, those confirmation requests can be divided into two categories. Number one, positive confirmation request. Number two, negative confirmation request. Sir, what is a positive confirmation request? It refers to such a confirmation request where you are expecting the third party or confirming party. It is such a kind of confirmation request where you are expecting the third party or confirming party to respond. Either he agrees or disagrees with the information. If you are expecting the third party to respond back, either in case if he is agreeing also, you need a response, or if he is disagreeing also, you need a response. In both the cases, if you want the response from the third party, that we call it as positive confirmation request. On the other hand, what is the meaning of negative confirmation request is, if you are drafting your confirmation request in such a manner that where you are expecting the third party to respond back only if he disagrees. If you are expecting a response from the third party only if he disagrees, that means you don't need any confirmation if he is agreeing with the information. You need response from a third party only when he is disagreeing. That we call it as negative confirmation request. Okay. There could also be some circumstances where, let us say for example, you are an auditor, you are drafting confirmation request in such a manner that, sir, I'm auditor of so and so company. I came to know that you are my company's debtor, and can you please confirm me? Can you please tell me what is the amount you owe to my client? What kind of confirmation request it is? See, generally what will happen, we will mention the figure also, and we will ask the third party to respond whether it is correct or not. But in some cases, what I will do, I will draft the confirmation request in such a manner that I will ask the information from the third party directly. I will not tell him the amount. I will ask him to tell me the amount. So in that case, what request is it? It is also a positive confirmation request. Why? Because in this case also you are expecting the response from the third party in all circumstances. So that's why if you look at this meanings here, sir, what is a positive confirmation request? If the auditor is expecting the third party to respond, either he agrees or disagrees with the info. Or if you are asking the information from the third party directly, even if you are directly asking the information from the third party, this detailed definition you will be able to find it in the material here. See here, a request that confirming party respond directly to the auditor, whether confirming party agrees or disagrees, or providing the requested information. You are not asking him to confirm, you are asking him to directly provide the information. That is also a positive confirmation request only. Whereas if you are expecting the response only if it disagrees with the information, that we call it as negative confirmation request. Then exception, there is one more term called exception. What is the meaning of this term exception? So exception means if there is a difference between information which is there in the confirmation request or books of accounts. Generally both will be same information. Whatever information which will be there in the books of accounts, that only you want a confirmation. So information which whatever is there in the confirmation request or books of accounts, that means you are including some information in your confirmation request which is there in the books of accounts, and whatever response you got from the third party, both are not matching, that we call it as exception. Which means what? Let us say I asked the third party saying that, sir, my client is saying that you owe them 1 crore rupees of money. So this is the information, the confirmation request. But the third party responded back to me saying, no, I don't owe 1 crore rupees. I owe 80 lakh rupees only. So there is a difference between the information which is there in the confirmation request or books of accounts and the response provided by the third party. This difference we are going to call it as exception. This difference we are going to call it as exception. Now I have one important question for you, one important conceptual question for you. So in case if there is an exception, Can that be considered as misstatement if there is a difference between the confirmation request and the information provided by the third party? Does it automatically mean that there is a misstatement in the financial statements? No. Don't be of a misconception. Why? Because exception might happen not just because of my client's mistake. The difference might happen even because of the third party's mistake also. The third party might not have recorded one purchase in his books of accounts. That's why mistake could have come. So that's why whenever there is an exception, whenever there is a difference between the information contained in the confirmation request and the response provided by the third party, don't jump to the conclusion that it is always a misstatement. Exception doesn't always mean misstatement. Sometimes exception could arise even because of the third party's mistake also. Next, there is something called non-response. So what do you mean by non-response? So they have defined this term non-response something like this. Non-response means you sent a confirmation request, either positive or negative. You sent a confirmation request, either negative or positive, but it was returned undelivered. It was not deliverable. You got it back. Either positive request you have sent, negative confirmation request you have sent, but it was undelivered and you got it back. That is a case of non-response. Or you sent a positive confirmation request, it was delivered also, but you are not getting a response. Failure to get a response to a positive confirmation request. This also we call it as non-response. So it could mean two circumstances. You are sending a confirmation request, either positive or negative, but it was returned undelivered, or you are sending a positive confirmation request that was delivered also, but you did not get the response. That also we call it as non-response. In case if you have sent a negative confirmation request, it was delivered also, but you are not getting response, can we also call it as non-response? No, that we can't call it as non-response. Why? Because in case of negative confirmation request, you have sent it, it was delivered, but you're not getting any response. That means it is the implied indication that third party might have agreed with the information. You ask the third party to respond back only when he disagrees. If he's not responding back, what does that indicate? He has agreed. So that's why they did not include that scenario here. So if you are sending a negative confirmation request, it was delivered to the third party also, but you are not getting any response. Can I call that as non-response? No, because that is a deemed acceptance by the third party. Clear? So these definitions are very important for MCQs. So since we understood the basic meanings, now let us try to understand what and all are the various steps involved in external confirmation procedure. If you want to send external confirmation request and thereafter you want to get the responses, and if you want to get better responses, what are the steps you have to follow? There is other way of saying it. In the standard they say that what is the control over external confirmation procedure. So when you are using external confirmation procedure, the auditor shall maintain control over some steps. So either they are asking you the question, what are the steps involved in sending the external confirmation request, or if they are asking you the question, what controls, what are the areas over which auditor should have control while sending confirmation request, the answer is going to remain same. So either we call it steps of external confirmation procedure, or if I say what is the controls which should have in external confirmation procedure, both mean one and the same. So practically speaking, there are 4 steps involved. If you want to send external confirmation request and if you want to get the best response from the external confirmation request, 4 steps are involved. What are that? Number 1, determine the information to be confirmed. First, you have to select regarding which information you want to send the confirmation request. Regarding which information you want to send the confirmation request. There might be n number of things. There might be n number of items in your financial statements. Not every area is relevant for external confirmation. So that's why first you decide regarding which information you want to get the confirmation request. So that is the first step. Determine the information to be confirmed. Now I have one extension here. See, generally we use external confirmation for what purposes? Generally we use external confirmation request for which purposes? For amounts and balances, whether the amount is correct or not, whether the balance is correct or not, debtors balance is correct or not, creditors balance is correct or not. So mainly we use external confirmation for accounts balances. But do you think the usage of external confirmation request is restricted only to amounts and balances? Can't we use it for qualitative aspects? There is no doubt external confirmation, we are going to use it to confirm amounts and balances. There is no doubt about it. But the question which I am asking is, do you think the use of external confirmation is restricted only to amounts and balances? Can't we use it for other purposes? No, we can use it for other purposes also. For other qualitative aspects also we can use it. Sir, what are the examples? So we can use this external confirmation even for qualitative aspects, like to confirm terms of the contract, whether terms of the contracts and agreements are correct or not. To know that for that also you can send external confirmation. Transactions between entity and other parties, whether transaction has taken place or not, you want to know. For that you can use external confirmation. Absence of certain conditions such as side agreement. You have a suspicion your client might have entered into side agreement. You want to confirm it. For that, you can use external confirmation. Or property deeds given as security. You wanted to verify the immobile property details. I'm asking them to show the original documents. Client is saying, sir, original documents are not there with us. We have given it as a security. Original documents are lying with the banker. I want to know whether really original documents are lying with the banker or not. Send external confirmation request to the banker. So the overall point, what I want to conclude here is there is nothing wrong in saying that we use external confirmation mainly for the purpose of confirmation of amounts and balances. Yes, but it is wrong to say that the usage of external confirmation is restricted only for accounts and balances. That is wrong to say. Why? Because we can use our external confirmation even for qualitative aspects like this also. Clear? Right. So whatever it is, first to determine the information to be confirmed. Thereafter, once you have determined, okay, for this information I want external confirmation, now you have to select the appropriate confirming party. Now you have to select what? Appropriate confirming party. Who is that appropriate person to whom you have to send the confirmation request? Select that appropriate confirming party. Sir, why selecting the appropriate confirming party is very important? Why? Because if you send the confirmation request to the appropriate confirming party, then only you can get the response, and then only responses will be reliable. If you send the confirmation request to an inappropriate party, even first thing you will not get response. Even if you get the responses also, those responses will not be reliable. So that's why select the appropriate confirming party to whom you have to send the confirmation request. So once you have determined the information, once you have selected the appropriate confirming party, the next step is what? Designing of the confirmation request. You have to design the confirmation request. Sir, what do you mean by design? So in designing the confirmation request, various factors you have to consider. Do you want to use positive or negative? Do you want to use in a paper form or electronic form? So like that, you have to design your confirmation request. And while designing the confirmation request, various factors you have to consider. While designing the confirmation request, various factors you have to consider. Sir, what and all factors I have to consider in designing the confirmation request? Number one, risk of material misstatement. If the risk is high, don't go for negative confirmation request. Why? Because negative confirmation request is less reliable than when compared with the positive confirmation request. So if the risk is high, don't go for negative confirmation, go for positive confirmation. Layout and presentation, in which format you wanted to present it. Use your prior experience by designing the confirmation request. Keep in mind assertion, which assertion you want evidence, keep that in mind. Method of communication, whether you want it in a paper form or electronic form, that you keep in mind. Management authorization, some third parties will say we will respond only when we have management authorization. In that cases, decide whether you have to include management authorization to get that response from the third party. And ability of the intended party, ability of the intended confirming party to confirm or provide the requested information. So how much willing the third party is to provide the information. If the third party is very much cooperative, he is willing to provide so much of information, you can ask many details from him in the external confirmation request. In case if the third party is not cooperative, he is not ready to willing to share more information, then what he will do? If you send the detailed request from him, he will delete that email. Keep aside answering. If the third party is not willing to provide you information, he is not able to allocate that much amount of time for you, should ask only total balances. If you ask him to share the invoice wise details also, he will not provide because he is not that willing. But some third parties will be there who are very patient, very willing. They have the intention to share every kind of information. There you can take the leverage and ask the invoice wise details also. They will provide it. So this also you have to keep in mind. So consider all these factors. What factors very important? Often tested in the examination. So what and all factors you have to consider in designing the confirmation request? Consider risk of material misstatement, layout and presentation, prior experience, assertion, method of communication, management authorization, ability of the intended confirming party. Consider all these factors and decide your confirmation request. Then, okay, sir, I have designed the confirmation request also. After designing, what you will do? Keep it in your office desk? No, you have to send it. No, you have to send it. And in case if you are not getting the response on time, you have to do the follow up. But follow up we will do only in the case of positive confirmation request. Where we will do follow up? We will do the follow up only in the case of positive confirmation request. So you design the confirmation request, just designing and keeping it in your office drawer will not be enough. You have to send it, and in case if it is a positive confirmation request, if you are not getting the response within time, you have to even do the follow up request also. Have to do even follow-up request also. So these are all the various steps involved. So 4 steps are involved in external confirmation procedure: determining the information to be confirmed, number 2, selecting the appropriate confirming party, designing of the confirmation request, and then follow up on the request. Then last one. So not last one, we have few more paragraphs. Usage of negative confirmation request. Sir, can I use negative confirmation request also? Yes. Can I use negative confirmation request also? Yes. But you have to be very careful here, because negative confirmation request will give less persuasive evidence. Negative confirmation request will give you less persuasive evidence. Sir, what do you mean by less persuasive evidence? It will give you less convincing evidence than when compared with a positive confirmation request. So when I do a comparison between positive confirmation request and negative confirmation request, which will give me more convincing evidence? Positive confirmation request will give me more convincing evidence than when compared with the negative confirmation request. Don't use negative confirmation request if the risk of material misstatement is very high. If you find that risk is very high, then don't use negative confirmation request. So practically speaking, you can use negative confirmation request in only in those areas where the risk of material misstatement is low and the internal controls are all working effectively. In case risk is very low and all the internal controls are working effectively, only in those areas you go for negative confirmation request. If you find that risk is very high, don't go for negative confirmation request. Always try to use a positive confirmation request in that area. And particularly when you can use negative confirmation request. Negative confirmation request can be used only in areas when all these conditions are present. So if you see it here, the auditor shall use negative confirmation request as a sole substantive audit procedure. This term is very important. From this, they will use the questions. So what are the areas in which the auditor can use negative confirmation request as a sole substantive audit procedure? What do you mean by sole substantive audit procedure? As the only substantive audit procedure. So in which areas or what and all conditions must be present if you want to use negative confirmation request as a sole substantive audit procedure? All these conditions must be present. What are they? That itself have summarized it here. Risk of material misstatement is very low. Controls are very effective. And the population is small and it contains homogeneous transactions, low exception rate. In those areas, generally exceptions are very rare, or recipient doesn't disregard the request. That means you know the recipient so well that the recipient so well that he will not disregard. That means you know the third party so well that if he receives a confirmation request, he will definitely read it, and if he finds something wrong, definitely he will respond. That much confidence you are having on the third party, then only you send a negative confirmation request. So when all these conditions are present, then only you can use negative confirmation request as sole substantive audit procedure, as the only substantive audit procedure. Next one. Sir, I want to send a confirmation request, sir, but management is not letting me to send the confirmation request, sir. Possible. I want to send confirmation request to the third party, but the management is not allowing me. Management is refusing me to send the confirmation request to the third party. Then what you should do? In case if the management is refusing you to send the confirmation request to a third party, first go and inquire. First go and ask them, sir, what is the problem? Why are you not letting me to? Why are you not letting me to communicate with your third party? What is the reason for refusal? First, you have to go and ask. Now, there might be a reasonable justification. There might not be a reasonable justification. That means the client is saying a valid reason. Sir, so and so things are there. There is a valid reason. That's why you should not go for external confirmation. So if I find that there is a reasonable justification, management has given me reasonable justification why I should not communicate with a third party. So in that cases, what I will do? I will try to perform alternative audit procedures. Sir, what if alternative audit procedures are not possible? Communicate with those charged with governance and try to modify the opinion. So in case if there is a reasonable justification, perform alternative audit procedure. Then go and communicate with those charged with governance and consider modifying your opinion. Sir, what if there is no reasonable justification? If there is no reasonable justification, I went to the management and told I want to communicate with your debtor. Management told no. I asked them reason. They are giving me all the bullshit reasons, or they are not giving me any valid reason at all, or they are saying, or they are giving me some reason, but it is not acceptable. So if there is no reasonable justification, first step what you have to do is reassess the risk of material misstatement. Earlier you don't know management are of this nature. Earlier you don't know. You might have thought risk of material misstatement as very low, but now you got to know the true nature of the management. So what we will do, we will have to reassess our risk of material misstatement, especially risk of fraud, and here also communicate with those charged with governance and consider modifying your opinion. Okay, so this is what you are required to do in case if the management is refusing you to send the confirmation request. Now we have few more points here. Management has agreed to send the confirmation request and you communicated with the third party also. From the third party, you got the response also. Management has given you permission to go and communicate with the third party. We communicated with the third party and the third party has even given the response also, but those responses are not reliable. Sir, when generally so when that doubt regarding reliability will come, when auditor identifies doubts about reliability of response to a confirmation request, he shall obtain further audit evidence. See, generally when we will get that doubt and when we will get that doubt regarding reliability of evidence, reliability of external confirmation is when the third party is not an independent person. The debtor is there, but the debtor is a related party of your client. So then you will get doubt regarding reliability of audit evidence. So whenever you are getting a doubt regarding reliability of evidence, you shall obtain further audit evidence to resolve the matter. So whether that you got a doubt whether they are reliable or not. So try to perform further audit procedures and resolve whether that doubt is a genuine doubt or a wrong doubt. So whether it is reliable or not, try to resolve it. And if you determine that response to a confirmation request is not reliable, finally after performing further audit process, you have decided no, that third party has colluded with the management and he has given me wrong response. So if the auditor determines that confirmation request is not reliable, he shall evaluate implications on assessment of risk of material misstatement. Here also you have to do the reassessment of risk of material misstatement, including risk of fraud and and its impact on the nature, timing, and extent of your audit procedures. And then finally, whatever responses you have got by way of external confirmation, you will send the external confirmation and those third parties will give you responses. Those responses you have to evaluate, you have to analyze all that responses. How you have to analyze it? Whatever responses you have got, that you have to divide into multiple categories. So whatever responses you have got from a third party, that responses you have to divide into these categories. What are they? Those responses by the appropriate confirming party indicating agreement. Out of all the responses, how many responses are there which are in agreement with the books of accounts, which are confirming the information in the books of accounts? Response is deemed unreliable. So you got a response, but that response is unreliable. Keep it under one category. Non-responses, whatever non-responses is there, that you keep it in the non-category. What is non-response? I've already told you in the introduction. And whatever responses which are indicating an exception, that you keep it in a separate box. Like for example, take 4 boxes, whatever responses you have got. So whatever responses which are agreeing with the books of accounts, keep it in one box. Whatever responses which are deemed unreliable, keep it in other box. Whatever non-responses are there which are returned undelivered, keep it in one box. And whatever exceptions are there, that you keep it in one box. So like that you have to segregate it, and you have to analyze finally, considering all these responses and considering all this you have to consider, and finally you have to decide whether further audit procedures is necessary. So depending on all these responses, whatever you have got, you have to take a call whether whatever audit procedures you have performed till now, will that be enough, or do you need to perform additional audit procedures? That call you have to take it. Understood? So this is what regarding SA 505. So now the next standard which we will try to pick up now for our discussion is 580. We will try to do. First we will try to complete 580, which is related, which is more or less something looks like SA 505 only. So we'll try to do SA 580. Sir, what is SA 580 talking about? SA 580 is talking about written representation. SA 580 is talking about written representation. Sir, what do you mean by written representation? First, meaning. So meaning is if the management is providing a written statement to the auditor. See, in case of external confirmation, third party is giving a written response to the auditor. But in case of written representation, the written statement is provided by the management. If the management is providing a written statement to the auditor regarding what? To confirm certain matters or to support other audit evidences, that written statements given by the management to the auditor, we are going to call it as written representation. Just in one example, SA 501, we have seen regarding completeness of litigations and claims, the standard has asked you to give written representation. So the management will give you written statement confirming that all the litigations and claims they have informed to the auditor, and all the litigations and claims they have properly disclosed in the financial statements as per applicable financial reporting framework. So the management has given a written statement there to confirm certain matters or to support other audit evidences. Those written statements, I call it as written representation. Now, what is the significance of this written representation? What is the significance of this written representation? See, the significance of this written representation is these written representation are like evidence. These written representation are evidences like responses to inquiry, like the way we do the inquiry and get the responses. No, similarly, written representations are also a kind of audit evidence. But the problem is written representations do not provide sufficient and appropriate audit evidence on their own. Written representation do not provide sufficient and appropriate audit evidence on their own. Sir, what is the meaning of this sentence? You can't rely completely on written representation for the purpose of forming your opinion. You can't say just on the basis of written representation, whatever management has provided, that alone I will consider it as evidence, and on that basis I will give the opinion. That is not going to work. Yes, they are supporting evidence, but they do not provide evidence on their own. Now, sir, what are the matters regarding which I need to obtain written representation? Now come to SA 580 once again. So what are the different matters on which I need to obtain written representation? So what are the different matters on which I need to obtain written representation? So what are the objectives? So number one, to obtain written representation, every auditor should compulsorily obtain written representation that management has fulfilled their responsibility for preparation of financial statements and completeness of information provided to the auditor. It is a responsibility of every auditor to compulsorily obtain one written representation regarding that management has fulfilled their responsibility for preparation of financial statements and have completely provided the information to the auditor. On these two matters, every auditor must obtain written representation from the management that they fulfill their responsibility and they have completely provided the information to the auditor. And also to support other audit evidence relevant to financial statements or specific assertions in the financial statements by means of written representation. So first you will get the confirmation regarding fulfillment of responsibility, completeness of information. Not just that, to support any other assertion, to support any other items of the financial statements also, you can ask for written representation. Like wherever there is a requirement of standard, SA 501 asked us to obtain written representation regarding litigations and claims, that we will try to get it. And in SA 570, that standard will ask us to get the written representation regarding going concern, that we will get it. SA 560, there they will ask you to get the written representation regarding subsequent events, that we will get it. So like that, to support other evidences also, you have to get the written representation. And whatever written representations, in case if you have requested the written representation from the management, they will provide it in most of the cases. In some cases, they will not provide it. When they are providing the written representation, you have to respond to them appropriately. Even when they are not providing the written representation also, you have to respond to them appropriately. Sir, how to respond appropriately? That's what we are going to learn in the subsequent part of the standard. So 3 objectives, very simple. This you have to remember, objectives are very important. So the auditor must obtain written representation from the management regarding acceptance of the responsibility and for preparation of financial statements and full and completeness of information provided to auditor, to support other evidences, and to respond appropriately when the management has provided the written representation or has not provided the written representation. In both the cases, you have to respond appropriately. How to do that response appropriately? That's what we are going to learn it in the subsequent paragraphs. Now, question will come, sir, from whom you will request a written representation? From whom you will request written representation? Definitely will say management. But what do you mean by management? Management is very broader term. Multiple people will get involved in the management definition. Will you go and ask written representation from each and every member who is a part of the management? No. So you will request written representation from that part of the management whom you believe that from that part of the management with appropriate responsibilities for the financial statements. And those who have knowledge of the matters concerned will not go to each and every board of director and ask for written representation. We go to that part of the management who are associated with preparation of financial statements and whom we feel that they will have the knowledge of the matters regarding which I am asking written representation. From that people, I ask the written representation. Like what? Like CEO of the company, CFO of the company, or other equivalent person. Like if audit committee is there, audit committee. From that people, I request a written representation. Now, generally we expect that since management is responsible for preparation of financial statements, we expect them to have the sufficient knowledge of all the matters regarding which I am asking the written representation for. I can take that assumption or not. So I can take an assumption that I am asking management written representation. I can go with the assumption that management will have all the information required for giving that written representation to me. But in some cases, management might not have specific information. Let us say you want written representation regarding litigations and claims. You went to the CFO, but CFO told, no sir, I am not looking into legal matters. There is a legal team. I will not give written representation. Can he say that? No, there is no knowledge. Since see here, so you can't say that I don't have the knowledge regarding information, that's why I will not give you written representation. You can't say. In that case, what CFO should do, sir? In my case, I went to the CFO and asked him to give written representation regarding completeness and litigations of claims. He told that I don't have knowledge. What he should do, he should go to the concerned person in the organization, get the required information, then provide the written representation to the auditor. He must provide it. He can't simply say, sir, I don't know about this information. Separate team is looking into it. I will not provide you written representation. Can he say that? No. It is his responsibility to go to the concerned person, either within the organization, outside of the organization, get the required information, then provide the written representation to the auditor. Sir, who could be that other people with whom management can inquire and provide the written representation, sir? They could be an actuary who is responsible for actuarially determined accounting estimates like gratuity provisions, etc. They could be staff engineers. They could be internal counsel, like that, with others people who have the specialized knowledge. They have to go, they have to get the confirmation, thereafter only they have to provide the written representation. They can't simply say, I don't possess specific knowledge, I will not give you written representation. Like that, they can't wipe off their hands. Next, most important part, next paragraph also very often tested, written representation from management to reconfirm its responsibilities. In some cases, the auditor will ask the management to reconfirm their responsibilities, to reconfirm its acknowledgement. Previously, the management has already accepted the responsibilities. But in some cases, I might ask the management to give a reconfirmation of their acknowledgement and understanding of those responsibilities in written representation. Sometimes I will ask reconfirmation of management acceptance of the responsibilities by way of written representation. When, sir? So these are the circumstances when you need to reconfirm the responsibilities. Those people who have signed the terms of the audit engagement no longer have the relevant responsibilities. Those people who have signed the terms of the engagement, they have changed. Now better to get the written representation once again from the new team. The terms of the audit engagement were prepared in the previous year. Terms of the engagement were prepared in last year. In the current year, engagement terms have changed. Get the written representation once again, reconfirming the responsibilities. There is any indication that management misunderstand those responsibilities in the last year, or management gave their acceptance, but they misunderstood their responsibilities. Try to sort out that misunderstanding by getting a written representation once again, by reconfirming its responsibilities, or there could be change in circumstances which might make it appropriate to do so, or there could be some change in the circumstances because of which you might ask the management to reconfirm their responsibilities. Clear? So this is what regarding circumstances where you have to get the management to reconfirm the responsibilities. Now, you will get the responsibility regarding management responsibilities. You will also get the written representation regarding completeness of information provided to the auditor. Will there be other matters regarding which you will obtain written representation? Yes, some examples they have given here. Some examples, not just on management responsibilities, not just on completeness of information provided to the auditor, even on some other matters also you can obtain written representation. What are they? Whether selection and application of accounting policies are appropriate. These are just examples, my dear students. Whatever accounting policies they are following, whatever accounting policies they have applied, are they appropriate? Whether matters wherever relevant have been recognized, have they recognized all the matters or not? What are their plans and intentions, and what are their liabilities? Title to control over the assets, what kind of title they are having over their assets, and what are the laws and regulations and contractual agreements. Understood? And there is also one more point. There are some written representations about specific assertions. There will be some specific assertions for which you need to obtain written representation. Regarding what? Especially when you are asking the written representations of the management regarding their plans or intentions. When you are asking the management regarding their plans or intentions, you should consider the following. So you are asking the management, sir, what are the plans for your future? Going concern, is it doubt there here? I asked the management to give a written representation. What are your plans for the future? They gave me plans for future. I should not blindly rely on the written representation. In that cases, I have to consider one or more of the following. What I have to consider? The entity's past history in carry out its stated intentions. In the past also, they might have stated what are their intentions. Did they carry out it in the past? Or the entity's reason for choosing a particular course of action. Sir, multiple actions are available. Why you are planning for this only? Analyze. The entity's ability to pursue a specific course of action. So why you are considering this course of action only? And the existence or lack of any other information that I might have been obtained during the course of the audit that may be inconsistent with management's judgment. So during the course, you obtain some information which is inconsistent with what management is trying to say. So all these factors you consider, then you evaluate whether whether written representations made by the management regarding their plans or intention is correct or not. Next, so date and period covered by the covered by written representation. Here, one important point I have to say here regarding date of written representation. See, date of written representation should be either on or before the date of auditor's report. Date of written representation should be either near. It should be as near as practicable to the date of auditor's report. Date of written representation should be as near as practicable to the date of auditor's report, but the date of written representation cannot be after the date of auditor's report. This is very important point. Date of written representation cannot be after the date of auditor's report. Why, sir? Why? Because written representation is an audit evidence. And what is the process of audit? First, you have to perform audit procedures, get the audit evidence. Thereafter, you give the audit report. So, since written representation is also a kind of audit evidence, date of written representation should be earlier than the date of auditor's report. There should not be a case where the date of written representation should be after the date of auditor's report. Like that, there should not be a scenario. Why? Because the process is what? First you obtain audit evidence, then only you will give your auditor's report. So that is one important point. So the date of written representation should be as near as practicable to, but not after the date of auditor's report on the financial statements. Sir, how you have to get the written representation? Generally in the form of a representation letter. You have to get the written representation in the form of a representation letter. It will be like one letter addressed to the auditor. Now here we have one more important point for MCQs. So what they say here is, if as per law or regulation, the company is required to make some public statements. If as per some law or regulation, the company is required to make some public statements, written public statements. And in that public statement, whatever information you want from written representation, that information is already included in that written public statement, which is available for everybody. Do you need to ask the management? Should you insist the management to include that once again in your written representation? Not required. Not required. So that's what they say here. If law or regulation requires management to make some written public statements about its responsibility, So the management has made some written public statements. They're available in the public domain regarding their responsibilities. And the auditor determines that such statements provide some or all the representation required in that public statements, whatever confirmation you want, that is already included in that public statement. Then the relevant matters covered by such statements need not be included. You need not include that once again in the representation letter. Why? Because openly, publicly, in the public statement, they have accepted their responsibility. Once again, why you need to specifically include them once again in the representation letter? Not required. No. So now how they will ask you is they will frame a MCQ here. In the MCQ, they will ask you to find out which of the following option is correct. So in one option, they will remove this not. So they will say that even though that information is there in the written public statement, it must be included in the representation letter. No, that statement is incorrect. So you should have the capability to read the sentence with patience, analyze it, interpret it, and answer it correctly. So like this, wherever complex statements are there, they will try to play it with you. Next, sir, if I get a doubt regarding reliability of written representation, what I should do? First of all, when you will get a doubt regarding reliability, when you have doubt regarding competence, capability of the management, when you have doubt regarding their integrity, their confidentiality and all, when you have doubt regarding their ethical values, then obviously a doubt should pop up in your mind. Since the management is not competent, since the management is not having integrity, since the management is not having ethical values, how far the written representations provided by them are reliable? You should get that doubt. And particularly if written representations are inconsistent with other evidences, you got other evidences, you got written representation, but whatever written representations are saying that is not reflected in other evidences, then once again you have here doubt should be very strong. Here doubt should be very strong. If written representations are inconsistent with other evidences, whatever you have obtained, so your doubt should be very strong here. And if the auditor concludes that, so first you will get the doubt, then you will try to resolve it. So by way of resolution, if the auditor concludes that written representations are not reliable, management gave you written representation but they are not reliable, then what auditor shall do? He will take appropriate action, even determining the possible effect on the opinion. You can consider its impact on your opinion, and here generally you can go for directly disclaimer. You can generally go for what? Directly disclaimer. If you decided that written representations given by the management are not reliable, directly you can go for disclaimer also. Next, sir, I am requesting the management representation, but they're not giving me written representation. In the previous paragraph, they gave me the written representation, but they're not reliable. But in this paragraph, I am requesting them the written representation, but they're not providing me only, sir. Then what I should do? In case if the written representations are not provided, first go and discuss the matter with the management, re-evaluate their integrity, reassess their integrity, how far you earlier thought that management are honest, but now re-evaluate that honesty and take appropriate action like determining the possible effect on the opinion. Here also you can consider modification of opinion. So that's what I have told, disclaimer of opinion. So whatever they have told, whatever I have told you here also disclaimer, here also disclaimer. So that itself has been explained in the subsequent paragraph. You can consider giving a disclaimer of opinion. So that's all. This is what regarding SA 580. So 3 standards we have covered till now. SA 501 we have covered, 505 we have covered, 580 we have covered. Now we will do one more standard, SA 510 we will do, opening balances and initial audit engagements. Right. So we'll try to do now SA 510, which is going to talk about initial audit engagements and the opening balances. So 2 terms are getting used here. First, let us try to get clear with the definition of these 2 terms. First of all, opening balances, which we are all well aware. Sir, what is an opening balance? Opening balance means balance which is there at the beginning of the period. Good, nice joke. That's what they have told it here. So those account balances which are existing at the beginning of the period, and these balances, these opening balances are nothing but last year's closing balances. Very good, excellent once again. So that is the next line. These opening balances are based upon the closing balances of the prior period, and this opening balances reflect 2 kinds of information. These opening balances will reflect 2 kinds of information. They will reflect the effect of transactions which have taken place in the previous period, and they also reflect accounting policies which are followed in the previous year. So opening balances are nothing but balances at the beginning of the period. These are nothing but which have been derived from the last year's closing balances, and this opening balances reflect 2 important information. So what is that important information reflected in the opening balances? Number 1, they reflect the effect of transactions which have taken place in the past year, and they also reflect accounting policies which are followed in the prior year. Now, what is initial audit engagement? Initial audit engagement means an engagement in which either the financial statements for the prior period were not audited. Last year financial statements are not audited. Then in the current year it will become initial audit engagement. Or financial statements for the prior period were audited but by a predecessor auditor. Last year financial statements are audited but by some different auditor. So then also the current year audit engagement will become the initial audit engagement. So 2 things here, either the prior year financial statements are unaudited, or the prior year financial statements are audited but by some predecessor auditor. Then in the current year audit engagement will become initial audit engagement. Now, sir, who is predecessor auditor? Auditor from a different audit firm who audited the financial statements of an entity in the prior period. Next one, sir, what is the objective? Okay, you understood the terms now. What is the objective? What is the objective of this SA 510? When you are conducting audit, what is your responsibility? Or in case, especially in the case of initial audit engagement, if this is an initial audit engagement for you, while conducting initial audit engagement, as per SA 510, you will have two objectives. First objective, so when you are conducting initial audit engagement, you should obtain sufficient and appropriate audit evidence about whether opening balances contain a misstatement that materially affect the current period's financial statements. So first I will talk about the first objective. So first objective of the auditor. Right. So first objective of the auditor as per SA 510 is whether opening balances contain a misstatement that could affect my current period's financial statements. For that, I need to obtain sufficient and appropriate audit evidence. I need to obtain sufficient and appropriate audit evidence whether opening balances contain any misstatement that could affect my current period financial statements. Definitely no. If in the opening balances, if there is any material misstatement, that will definitely have an effect on my current period's financial statements also. So that you need to obtain audit evidence whether opening balances contain a material misstatement that could affect my current period's financial statements. I will come back to the second objective later. We'll come back to the second objective later. First, we will try to complete the first objective. Okay, sir, you are asking me to obtain sufficient and appropriate audit evidence whether opening balances contain a misstatement or not. How I will do it, sir? By performing audit procedures. If you have to obtain sufficient and appropriate audit evidence, just like that, you will not get the evidence. You need to perform audit procedures. Sir, what procedures I have to perform regarding opening balances to obtain sufficient and appropriate audit evidence? So here, this paragraph you have to read. So you should read the most recent financial statements. When you are conducting initial audit engagement, whatever most recent financial statements are there, try to read the most recent financial statements, if any, and if the predecessor's auditor's report. If on the prior year financial statements, last year's auditor has given audit report, that also you read it. Then the auditor should obtain sufficient and appropriate audit evidence whether opening balances contain misstatement. How, sir? Determine whether prior period closing balances have been correctly brought forward. Last year's closing balances are correctly brought forward or not, you have to check it. And also, if there are any items related to previous in the current year has been found out, whether they have been shown as prior period items or not, that you need to check it. And check whether opening balances are reflecting application of appropriate accounting policies. I told in the opening balances, you will get to know what accounting policies are followed in the past year. So analyze whether in the opening balances, whatever accounting policies that have been followed, whether they are appropriate or not. Then you have to perform one or more of the following procedures. Like what, sir? Where the prior year financial statements are audited, perusing the copies of the audited financial statements. If the last year financial statements are audited, ask the management to give the copies of the last year's audited financial statements. Evaluating whether audit procedures performed in the current period provide evidence relating to opening balances. Analyze whatever audit procedures you have performed for the current year. Are they giving you any evidence regarding opening balances? Analyze it. And even you perform specific audit procedures to obtain opening balances. Sir, what are that specific audit procedures that they try to say it here? What specific audit procedures you have to perform regarding current assets and liabilities? What specific audit procedures you have to perform regarding non-current assets and liabilities? Now, coming to current assets and liabilities, when you take an example like inventory, when you are performing audit procedures of the current year, when you are performing current year's audit procedures, you will also get audit evidence regarding opening balances. Like when you are verifying sales of the current year, when you are verifying purchases of the current year, they might give evidence regarding opening balance, right? And also you have to perform, especially when it comes to inventory, these audit procedures you have to perform in case if you want to obtain evidence regarding opening balances. What are they? Observing a current physical inventory counting. When for the current year they will be doing the inventory counting, no, go and attend it. That balance you reconcile it with the opening balances. Do the reverse calculation. So particularly when it comes to inventory, if you want to obtain audit evidence, attend that inventory counting process which is happening on the current year's balance sheet date. From that you reconcile the opening balance. And also perform audit procedures on the valuation and perform audit procedures on the gross profit ratios and cut-off related procedures. So these procedures you can perform in the current year if you want to obtain audit evidence, especially regarding inventory. So when it comes to non-current assets and liabilities, like fixed assets and all, some audit evidence may be obtained by examining the accounting records of the current year. Like depreciation, if you all verify, you can get to obtain evidence regarding opening balances. And also, even you can resort to confirmation with the third parties. To obtain evidence regarding opening balances, even you can resort to information through confirmation with the third parties also. So like this, these are the specific audit procedures which you have to perform regarding current assets and liabilities, and regarding non-current assets and liabilities, these are the audit procedures you have to perform. Okay, sir, this is also fine. We will perform audit procedures. Now, what will be my impact on reporting? Let us come to the reporting. So you will perform audit procedures regarding opening balances. Now by performing that audit procedures, you will have observations. Sir, what observations will be possible? After you have performed all the audit procedures on the opening balances, two outcomes could be possible. What are they? Number one, auditor obtains sufficient and appropriate audit evidence that opening balances contain a misstatement. So if you are not able to find any misstatement, well and good. But there could be a scenario after performing all the audit procedures, whatever I have told you now, you obtained sufficient and appropriate audit evidence that opening balances contain a misstatement and it is not appropriately presented or disclosed in the financial statements. That could have an effect on the current period financial statements. What you will do? You will modify your opinion. And what opinion you will give? Either qualified or adverse. Why? Because you have obtained sufficient and appropriate audit evidence. You obtain sufficient and appropriate audit evidence that opening balances contain a misstatement that could have an effect on the current period financial statements. You will modify. What modification you will give? Either qualified or adverse, because it is a case of availability of audit evidence. There could also be one more case. What is that one more case? You performed all the audit procedures regarding opening balances, whatever I have told you till now, but you are unable to obtain sufficient and appropriate audit evidence whether opening balances contain a material misstatement or not. You performed audit procedures, but you are unable to obtain sufficient and appropriate audit evidence whether opening balances contain a misstatement or not. You are not in a position to obtain audit evidence. Then what you will do? Here also you will modify. But which modification? You will give either qualified or disclaimer, because it is a case of non-availability of audit evidence. If the possible effect is only material but not pervasive, qualified. If the possible effect is material and also pervasive, give a disclaimer. Understood? See, only one objective we have covered. I was telling the standard is having two objectives, but till now I have covered only one objective. So there is one more objective. There is one more objective. Sir, what is that one more objective? As I have told, opening balances reflect two things, no? One is effect of transactions which have taken place. Other one is accounting policies. Now regarding that accounting policies, we have one fundamental accounting assumption, which is nothing but what? Consistency. What is consistency? Accounting policies, whatever have been applied in the previous year, that must be consistently applied in the current year or not? Yes or no? That also I need to obtain audit evidence. That is the second aspect. So that is the second objective. You need to obtain sufficient and appropriate audit evidence whether accounting policies which are reflected in the opening balances have been consistently applied in the current year. Whatever accounting policies are there in the previous year, whether they have been consistently applied or not. If at all any change has happened, sometimes because of genuine reason you can change the accounting policy. In case if you have made a change in the accounting policy because of a genuine reason, you need to obtain sufficient and appropriate audit evidence whether appropriately disclosed or not. So two things. You need to obtain sufficient and appropriate audit evidence that without any valid reason, accounting policies have not been changed. Whatever accounting policies which are followed in the prior year, same accounting policy should be applied in the current year also. In case if there is a valid reason because of which you have made the change in the accounting policy, then you need to obtain sufficient and appropriate audit evidence whether it has been appropriately disclosed or not. Understood? Now, sir, how you will do that, sir? How you will get to know whether accounting policies are consistently applied, whether changes have been appropriately reflected or not? You perform audit procedures. Now, there also, after performing audit procedures, you will have your observations. Once you have performed audit procedures, whether accounting policies are consistently applied or not, you will have audit policy. You will have your observations. What observations could be there? Let us say as an auditor you have concluded. That means you had sufficient and appropriate audit evidence and you concluded any of these things. Accounting policies are not consistently applied. There is no valid reason. Without any valid reason, they have changed the accounting policy. They have followed last year SLM. In the current year, they have changed it to WTV. And when I check the reason, there is no reason. So if the auditor concludes, that means if you have sufficient and appropriate audit evidence that accounting policies are not consistently applied in the current year, that means without any valid reason they have changed the accounting policy. Or there is a valid reason for which you have made a change in the accounting policy, but that change is not properly presented or disclosed in the financial statements. But that change is not appropriately presented or disclosed in the financial statements. Then what you should do? Then you have to modify your opinion. Which kind of modification? Either a qualified opinion or adverse opinion you have to issue. Which opinion you have to issue? Either a qualified opinion or adverse opinion. Clear? So this is what impact of audit reporting on your observations on accounting policies. Clear? If you have obtained sufficient and appropriate audit evidence and you found out that without any valid reason they have changed the accounting policy, or there is a valid reason they have changed the accounting policy but they have not properly presented or disclosed in the financial statements, modify it either by giving a qualified opinion or an adverse opinion. Next, one more last paragraph here. Modification in the predecessor's auditor's report. See, if the last year's auditor has given a modified opinion, does that mean is there a mandatory obligation on the current year auditor also to compulsorily modify his opinion? Not required. If the last year's auditor's opinion contain a modified opinion, there is no requirement that the current year auditor also should modify. Nowhere they have told it. They did not say it anywhere. Just because last year's auditor contains a modified opinion, they did not say it anywhere. Even the current year also should contain a modified opinion. No, they did not say. But when you will modify, if the reason because of which last year auditor has given the modification, if that remains relevant and material for the current year financial statements, because of whatever reason the last year auditor has given a modification, if that reason is still relevant for the current year, if that reason is still material for the current year financial statements, then only current year auditor shall express a modified opinion. Then only he will modify. Otherwise, he will not modify. Understood, right? So this is what regarding SA 510. So how many standards we have covered till now? 4 standards, I guess. 501 we have covered, 505 we have covered, 580 we have covered, 510 also we have covered. Now let us try to proceed further with the subsequent standard. Guys, are you all with me? Let us go to the next standard. The next standard which we'll do for revision is SA 550, talking about related parties. Related parties. In a quick manner, we'll try to complete this standard SA 550 related parties. See, related parties always carry a high risk of material misstatement. That is a fact which we all have to observe. Whenever there is a related party transaction, the chance of misstatement is very, very high. Sir, why the chance of misstatement is very, very high in case of related party transactions? Because influence is there. No, you are able to influence the other party. No, when you are able to influence the other party, you can get the things done in your favor. So that's why wherever there is a related party transaction, even if you see from the accounts perspective also, even if you see from the Companies Act perspective also, for related party transactions, there will be so many rules and regulations. For related party transactions, there will be so many disclosures also. For related party transactions, there will be so many disclosures. For related party, there will be some special accounting requirements. And even for related party transactions, as per Companies Act, so many approvals are also required. Even from the audit perspective also, whenever you are conducting an audit of your client, in the client's books of accounts, if you are able to find some related party transaction, there also you need more guidance. There also you need more guidance. Why? Because wherever there is a related party transaction, there is a high risk of material misstatement. So that's why even to help us out in that related party transactions, they have given one dedicated standard for us, SA 550, which is going to help the auditors to obtain sufficient and appropriate audit evidence regarding related party transactions. Let us try to understand what does that SA 550 say. First of all, what is the meaning of related party? As per SA 550, what is the meaning of related party? Here SA 550 has played it very safe. Here SA 550 has played it in a very safe manner. So what they have told us, if your applicable financial reporting framework has already defined, if the applicable financial reporting framework has already defined the term related party, go with the definition. That's what the first point says. Who is a related party? Related party as defined in the applicable financial reporting framework. If in the applicable financial reporting framework they have already defined the term related party, go with the definition. Sir, in case the applicable financial reporting framework is not providing any definition regarding related party, or they are providing the definition of related party but very minimal definition has been provided, then what I should do? Then the standard is defining. In case if the applicable financial reporting framework has already defined the term related party, go with that definition only. We are not giving any special definition. But in case applicable financial reporting framework has not defined the related party, or they have defined it but that definition is very minimal, then you follow the related party definition which we are giving in this standard. Sir, what is that definition? A person or other entity that has control or significant influence directly or indirectly through one or more intermediaries over reporting entity. Nothing but one entity is there. There is a company X Limited. It is having control over another entity Y Limited. Control or significant influence either directly or indirectly. Then they will be considered as related. No sir, there is one entity over which another entity is having the control. Either I am controlling you or I am having significant influence over you. We both are related. Or you are having control on me, you are having significant influence on me, then also will be considered as related. Or another entity that is under common control with the reporting entity through having common controlling ownership, owners who are close family members, common key management. Sir, what they are trying to say, very simple here. First 2 points is what? I control you or I have significant influence over you. We both are related. Second point, you are having control on me, you are having significant influence on me. We both are related. Or you and me, let us say for example 2 companies are there, X Limited, Y Limited, they are under common control. They are under common control. So how that common control can come? That common control can come by way of common controlling ownership. Same person is controlling that ownership in both the entities. Or that common control can come by way of close family members. The owners of X Limited, Y Limited, both are close family members. Or that common control can come from by way of common key management. We have same board of directors. Then also we both will be considered as related. So either one is controlling the other, or you are getting controlled by other, and third party, you and other entity both are under common control. That common control that can happen by way of common controlling ownership, owners who are close family members, or common key management. And one special point here, however, entities under common control of the state, that means government. If two entities are there who are under common control of one state, let us say for example LIC we have, SBI we have, so both are under common control of the state, central government, they both will not be considered as related just because they are under common control unless they engage in significant transactions or share resources to a significant extent. So generally, if two entities are under common control, they will be considered as related. But one exception they are giving: two entities, if they are under common control of a state, which means government, they will not be considered related because of that common control unless they share some significant resources or unless they engage in significant transactions. So this meaning of the related party you have to remember. But one more thing you have to remember: this meaning of related party will become applicable only when the applicable financial reporting framework has not defined the term related party, or they have defined it it in a minimal way. Then only you come and refer to that definition. If your applicable financial reporting framework has clearly defined the term related party, that only you have to follow. Don't come and follow this definition. Clear? Then thereafter they define a few terms like control and significant influence and all, so that you can refer to it. So but this point is important. Third point: the existence of following relationships may indicate presence of control or significant influence. Sir, are there any relationships? Are there any indicators? If there is any relationship, sir, you are saying you are completely defining the term related party because of control and significant influence. Sir, when we can say what kind of relationship indicate that there is a control or significant influence? Some examples they are giving: direct or indirect equity holding. So one entity is holding directly or indirectly another shares, or entities holding of direct or indirect equity or financial instruments in other entities. So either you are holding it or some other entity is holding in you, or being part of those charged with governance or key management. So some common management and all is there. Being a close family member of any person, so there is some close family member relationships are there, or having a significant business relationship with any person. So these are some indicators, some relationships which will indicate that there is a significant control or influence. So just for example's sake, try to refer to that once. Now let us come to the main part. All of these definitions and all you keep it aside. Let us come to the main part regarding audit. What is the implication? Nature of related party transactions and relationships. Sir, what they are trying to say here? See, when the related party transactions are happening in the normal course of business. When related party transactions are happening in normal course of business. So what do you mean by normal course of business? Transactions are happening in usual way. Normal market terms and conditions. No special consideration. No influence. At arm's length the transaction is happening. So in case if the related party transactions are happening in the normal course of business, then they might not carry high risk of material misstatement. This paragraph is very important. So when related party transactions are happening in the normal course of business at arm's length transactions, they might not carry any high risk of material misstatement. But in some circumstances, related party transactions might give rise to high risk of material misstatement. Usually, if they're happening in normal course of business, they might not carry high risk of material misstatement. But exceptional circumstances are there. There will be few circumstances. The moment you find related party, you will get an indication that there is a high risk of material misstatement. When, sir, are there any examples of the circumstances where the related party transactions might carry a high risk of material misstatement? Yes. What are they? Related parties are operating through an extensive and complex range of relationships. They are all operating through a complex range of relationships. That means there is no direct subsidiary holding. They have created shell companies, some 10-20 shell companies they have created, which is which subsidiary, which is which holding, which company is related to which, that I am unable to identify. So then the risk is very high. Especially this will happen in case of shell companies which are incorporated in tax havens like Mauritius and all. Some 10-20 companies they will incorporate. Money will route through that 10-20 companies, ultimately come to the first company only. So this is a very extensive and complex relationship. There the risk will be very high. Or information systems are ineffective. Whatever technology, whatever accounting systems the client is using for identification and reporting of information, for identification and reporting of related party transactions, they are not using effective information system. Accounting systems, they are not using it properly. for identifying and reporting transactions, there also risk of material misstatement is very high. Or related party transactions when they are not conducted under normal market terms, especially when done without consideration. They're not happening under normal market terms and conditions. Price differences are there, price variations are there, or some transactions are happening without any consideration only. Then these circumstances, the risk is very, very high. So these 3 points you have to remember. So what are the circumstances where related party transactions carry a high risk of material misstatement? Number one, when they are operating through a very extensive and complex relationship, information systems used by the entity for identifying and reporting related party transactions are ineffective, or related party transactions are not happening under normal market terms and conditions. Next. Then, so you have to understand, as an auditor, you have to understand related party relationships and transactions. As an auditor, you have to understand what kind of related party relationships your client is having, what kind of transactions they are doing. Sir, how will I do that inquiry? How will I do that? How will I try to understand it? Simple, do the inquiry. So this standard SA 550 is asking you to understand what kind of relationships entity is having with the related parties and what transactions they are engaging into with the related parties. Okay, sir, I have to understand. Standard is saying, but how? Don't worry. Standard itself is saying you have to go and inquire. Sir, what and all matters you have to inquire? Number one, identity of the entity's related parties. Ask the management to give me a list of all the related parties and check what changes have happened in that related party list when compared with the previous year. So check the changes from the prior period. Nature of relationships, not just the name of related parties. Ask them to share the relationship also. Are they subsidiary? Are they associate company? Are they joint venture or common directors? What kind of relationship you have? Ask the management to give that details also. Whether the entity entered into any transactions with these related parties, go and question them. Okay, sir, these related parties are there. With them, what transactions you have done? Inquire. And type and purpose of the transaction. For what purpose you have done it. Clear? Right. So this is what you have to inquire. So you have to inquire the identity of the related parties and their changes from the prior period. What kind of relationship you are having? Have they entered into any transactions? And what is the type and purpose? Not just that, you should inquire of the management and others within the entity, and you should also perform other risk assessment procedures to obtain understanding of controls. Don't just get a list of related parties, their relationship and transactions. Even you have to get an understanding of the controls also. For what purpose? Controls which are established to identify, account for and disclose related party transactions, to identify related party transactions, to account for related party transaction, to disclose related party transactions. What controls are there? And to authorize and approve significant transactions with the related parties. So to authorize, to give the approval of the transactions with the related parties, what kind of controls they are having? And authorize and approve significant transactions and arrangements outside the normal course of business. To authorize and approve the transactions which are outside the normal course of business, what kind of internal controls are there? So simply, if I have to wind up this entire paragraph into one single summary, you have to inquire about identity of the related parties, their relationship, transactions. In addition to that, you should also obtain understanding of the controls which you have regarding related party transactions. Then, see, in case if you are conducting audit of a small entity, you have to be very careful. Similar to risk assessment procedures, whatever we have covered. In case of small entities, limited number of people will be there. Owner will have control over the entire organization. Since owner will have control over the entire organization, he can enter transactions with anybody. He can enter the transactions with related parties also. He can influence the transactions with the related parties also. So that's why in case of small entities, because of limited number of people, because of owner manager himself is having control over entire organization, the risk of related party transactions is much higher in case of small entities. That you have to consider, that you have to keep it in mind while doing that risk assessment. That's what the summary of this entire paragraph, you will be able to find it. More or less, which will be similar to inherent limitations of internal controls. More or less, which will be similar to inherent limitations of internal controls, which we have covered it in the risk assessment and internal control chapter. Next. Then comes the main point here, how the auditor can verify existence of related parties. Sir, you want to know. You asked the client, they gave the list to you. Sir, these are all the list of related parties. Now you want to know, are there any extra related parties which are not covered in this list? How you can identify, how you can verify existence of related party? You have to do the inspection. You have to inspect some documents. Sir, what documents I can inspect? The list is there here. These are all the documents which you can inspect. So all these documents you can inspect to identify the related party relationships. What are they? Income tax returns you can verify. Information supplied by the entity to regulatory authorities like SEBI and all, that you can verify. Shareholder register, check the shareholder register. By with that you will come to know who is having significant ownership in this company. Statement of conflict of interest. Board of directors will submit something called statement of conflict of interest. You read it. From that you will get to know which parties are related. Record of the entity's investment. Check the investment ledger, where they are making investment, which is their holding, which is their subsidiary, which is their associate. That you will get to know. Contracts and agreements which they have done with the key management or those charged with governance. Significant contracts and agreements which are not in the normal course of business. There are some special contracts which are not usual business transactions. Read it. because mostly they will happen with the related parties only. Invoices and correspondence from professional advisors. Life insurance policies, on whose name life insurance policies are taken by your client company. Specific contracts renegotiated. Generally, once the contract is finalized, we will not do renegotiation unless it is a related party. So that's why check the contracts which are renegotiated during the period. Read the internal audit reports. Might be internal auditors might have found out something regarding related party transactions, and even documents associated with entities filings with the securities regulator like prospectus and all. Even these documents also you can verify to identify whether there is any related party transaction. Understood. So this is what regarding SA 550. So very important thing from here is what is the nature of related party transaction and how you will try to understand the entities, related party relationships and transactions. Then comes how you can verify the existence of related party transactions. These 3 points are very, very important from the standard SA 550. Clear? Able to understand? So this is what regarding SA 550. So how many standards we have covered? So 5 standards we have covered in the 500 series. Now what is left out in the 500 series? So we are left with SA 560, SA 570. Only 2 more standards we are left from SA 500 series. 560 we are left with, 570 we are left with. Thereafter 200 series we have. So since this class is going to extend for some more time, it will be better if we could have a break. It will be better if we could have a break. Let us take one short break now. Perfect. So let us try to resume our discussion. So before the break, we have completed SA 550. So now what we will try to do is 2 more SA 500 series of standards are left out. So one by one, we'll try to complete that as well. So first I'm going to start with SA 560. So we'll try to start our revision with SA 560. So let us try to quickly do it. Thereafter SA 570 will be there. So these two are important standards. Very often they ask the question from SA 560 and SA 570. Very, very important. In the entire SA 500 series, these two standards are going to be damn important. Let us try to revise them. So starting with SA 560, sir, what is the meaning of subsequent event? SA 560 is the standard which is talking about auditor's responsibilities in relation to subsequent events. So first of all, before we understand what are the responsibilities of the auditor regarding subsequent events, first we have to become clear what is the meaning of the subsequent event. See, when it comes to accounting standards, we have defined the term subsequent events. So those events which are happening after the date of financial statements but before the date of approval of the financial statements, that we call it as subsequent events. So as per accounting standards, we have understood the term subsequent events, and their subsequent events will be divided into 2 categories: adjusting events and non-adjusting events. Adjusting events are those events which are required to be adjusted in the financial statements, whereas non-adjusting events require only disclosure in the financial statements. So like that, we are already aware of the term subsequent events and types of subsequent events as per accounting standards. What we know is as per accounting standards. But as per SA 560, what is the meaning of the term subsequent event? We will see. So SA 560 defines the term subsequent event as something like this: the events which are occurring. So they say that events which are occurring between the date of financial statements and the date of auditor's report. Some event has occurred between the date of the financial statements. Let us say, for example, financial year 25-26. So date of financial statements, 31st of March 2025 is the date of financial statements. Now, but before we could understand this, it will be better if we could have understanding of some dates here, some dates associated with the financial statements. So few dates which are associated with the financial statements is date of financial statements. Sir, what is date of financial statements? The date of the balance sheet. The date of balance sheet, we call it as date of financial statements. Let us take the financial year 25-26. So for this, the date of financial statements will be 31st of March. Thereafter, what will happen? Once the financial statements are prepared, then they will be approved. Date of approval of financial statements will be there. Sir, what is date of approval of financial statements? The date on which the board of directors accept the responsibility for the financial statements. The date on which the board of directors accept the responsibility for the financial statements, that I call it as date of approval of the financial statements. How they will take that responsibility? Simply by signing the financial statements, they will take the responsibility. Let us say on 15th of April 2026, the date of approval of financial statements is there. Thereafter, audit will happen. So the auditor will mention the date in the auditor's report. So the date which auditor mentions in the auditor's report, that we call it as date of auditor's report. Let us say date of auditor's report is 20th of April 2026. Thereafter, what will happen? Thereafter, what will happen is financial statements will be issued. Date of issue of financial statements. Sir, what do you mean by date of issue of the financial statements? The date on which the financial statements are made available to third parties. The date on which the financial statements are made available to other than auditor and the management. The date on which the financial statements are made available to third parties. That date of issue of the financial statements. Let us say these financial statements are issued on 30th of April 2026. So like this, these are all the various dates which will be associated with the financial statements. Date of financial statements, simply date of balance sheet. Date of approval of the financial statements, the date on which the board of directors have accepted the responsibility for the financial statements. Date of auditor's report, the date which auditor mentions in the auditor's report. And date of issue of the financial statements, the date on which the financial statements are made available to the third parties. So these are all respective dates associated with the financial statements. Now they are defined in the term subsequent event. Now if you see the definition of subsequent event as per SA 560, they say that some event is occurring between date of financial statements and date of auditor's report. So that means between the date of financial statements and the date of auditor's report, some event has taken place here. Some event is occurring between the date of financial statements and the date of auditor's report, but that fact came to auditor's knowledge after the date of auditor's report. Some event has taken place between the date of financial statements and the date of auditor's report. Let us say some event has taken place on 10th of April 2026. Between the date of financial statements and the date of auditor's report, some event has taken place. But the auditor got to know about this subsequent event after the date of auditor's report. The auditor got to know about it on 25th of April 2026. Then only it will get qualified as subsequent event. In case if some event has taken place between the date of financial statements and the date of auditor's report, but the auditor got to know about it before the date of auditor's report only, then it is not called as subsequent event. Let us say some event has taken place on 10th of April 2026, but auditor got to know about it on 16th of April 2026 only. It will not be called as subsequent date. Why, sir? Because as per the definition, the event which is occurring between the date of financial statements and the date of auditor's report, but the fact came to auditor's knowledge after the date of auditor's report, those only will be considered as subsequent events. Those only considered as subsequent events. That is as per definition. Even if you apply your mind also, you will get to know the logic. Sir, what is the logic? Why? Because see, when you have already signed the audit report, thereafter if you got to know about subsequent event, now you start looking for guidance. You got to know that some event has taken place before the date of auditor's report, but you somehow got to know about it after the date of auditor's report. After you have signed the audit report, then you got to know about that subsequent event. Now you need specific guidance what you are supposed to do. In case if you got to know about an event before the date of auditor's report only, why you need guidance? In case if you got to know about any event which has happened before the date of auditor's report, and even you got to know about it before the date of auditor's report only, then you don't want any guidance. Why? Because since you did not give the audit report yet, since you did not sign the audit report yet, whatever action you want to take, that action you can take it through the audit report only. No, why you need special requirement? Why you need special guidance? Not required. But we need guidance if in case if we got to know about subsequent event after the date of auditor's report, then only we need guidance. So that's why the definition has been given like that. Okay, so events occurring between the date of financial statements and the date of auditor's report, but the fact came to auditor's knowledge after the date of auditor's report. This is what the meaning of subsequent event. Now, what are the objectives of the standard? What are the objectives of the standard? As per SA 560 regarding subsequent events, what is your responsibility? So as an auditor, you need to obtain sufficient and appropriate audit evidence whether subsequent events that require adjustment in the financial statements have been properly reflected in the financial statements or not. So first and foremost objective as per SA 560 is, as an auditor, you need to obtain sufficient and appropriate audit evidence, whatever subsequent events are there, which require adjustment in the financial statements, whether they are properly reflected in the financial statements or not. You have to obtain sufficient and appropriate audit evidence. Thereafter, in case if you got to know about subsequent event after the date of auditor's report, you have to respond appropriately to it. In case if you got to know about subsequent events after the date of auditor's report, you have to respond appropriately. Sir, how to respond appropriately? That's what we are going to see it in the standard. That's what we are going to see it in the subsequent part of the standard. So even if you see it here also, so what is the objective of the auditor? If I read it in a detailed manner, since it is important, here I will spend some time. So they say the objectives of the auditor is to obtain sufficient and appropriate audit evidence whether events occurring between the date of financial statements and date of auditor's report that require adjustment has been properly reflected, and you have to respond appropriately. In case if a fact came to your knowledge after the date of auditor's report, have they been known at the time they have if you have known about that event at the time of auditor's report, you would have done something different. You would have amended the auditor's report. Such a fact you got to know. That means you have already given the auditor's report. After giving the auditor's report, you got to know about some event. You got to know about some fact. You felt that had I known about this event at the time of auditor's report, I would have given an amended auditor's report. Such a fact came to your knowledge after you have signed the auditor's report, then you have to respond appropriately. How to respond appropriately? That's what we are going to see in the subsequent part of the standard. That's what we are going to see it in the subsequent part of the standard. Sir, before we can say how to respond appropriately, before we can talk about how to respond appropriately. Okay, sir, he will respond appropriately. How he will respond appropriately, that we will see. But before you could respond appropriately, first you should identify subsequent events. No, before you could respond appropriately, first you should identify subsequent events. Only when you identify subsequent events, then responsibilities will be there. Now, how will you identify subsequent events? You have to perform audit procedures. To obtain that sufficient and appropriate audit evidence, first you will perform audit procedures. By performing audit procedures only, you will be able to identify subsequent events. So what are that audit procedures which I have to perform in order to identify that subsequent events? A few audit procedures I have summarized it here. Number one, before you as an auditor, management is having more responsibility to identify subsequent events. As an auditor, you have some responsibility regarding subsequent events, but even before you, management is having more responsibility regarding subsequent events, because they are required to comply with accounting standards. They are required to prepare financial statements, so they are required to identify subsequent events. So before you, management would have already identified the subsequent events. So first to go and understand what procedure management has followed to identify the subsequent events. That is the first audit procedure. See, my pencil is kept on charge, so that's why I'm showing it here and reading it. So listen carefully. So first step, first audit procedure. Before you can respond appropriately, you have to identify the subsequent events. How you can identify subsequent events? Number one, first to go to the management, sit with the management, understand what procedures they have followed to identify the subsequent events. Then inquire them only. Ask them, sir, give me a list of all the subsequent events, whatever you have identified. Sir, what else I can do from my end? Read the minutes of the meetings of the board of directors or shareholders, especially which have taken place after the date of the balance sheet. After the financial statement date, check what board of directors meetings have taken place, what shareholders meetings they have taken place, and get the minutes of that meetings of the board of directors and shareholders, and read the minutes of that board of directors and shareholders. Then read the interim financial statements also, in case before, at the time when you are doing the audit, if the interim financial statements are already ready, if the quarterly financial statements are already ready, read that interim financial statements once. From that also you can get to know about subsequent events. And even you have to get the written representations also. Even you have to get written representations from the management also. So these are the simple procedures which you are required to perform to identify subsequent events. So 5 procedures we have. Repeat everyone. What are they? Number one, understand the procedures followed by the management to identify the subsequent events. Inquire the management and those charged with governance. Read the minutes of the meetings of the board of directors and shareholders which have taken place after the date of the financial statements. Read the interim financial statements, and even you try to obtain the written representations also. So these are all the audit procedures you have to perform. Okay, sir. By performing this audit procedures, I will obtain the subsequent events. I will identify the subsequent events. Now I have to respond appropriately. Now you come to the second objective. They are asking you to respond appropriately. How you have to respond appropriately? That's what the auditor's responsibility paragraph will talk about. Okay, so let us try to understand what are auditor's responsibility when you identify subsequent events. Now there are two cases. When you identify subsequent event also, there could be two cases. Case 1, you identified the subsequent event after the date of auditor's report, but before financial statements are issued. You identified subsequent event after the date of auditor's report. By the time you got to know about subsequent event, you have signed already the auditor's report, but the financial statements are not yet issued. Second case, by the time you got to know about subsequent event, that means fact has become known to you after the date of auditor's report and after issue of the financial statements also. After financial statements have been issued, then you got to know about subsequent event. Now what you will do? Two cases are there. So you got to know about subsequent event after the date of auditor's report, but before issue of the financial statements. Case number 2, you got to know about subsequent event after the date of auditor's report, even after issue of the financial statements, you got to know about subsequent event. In either of the case, what you are required to do? Tell me which one is more complicated, where I am in more trouble. When you got to know about subsequent event in the case 2, when you have got to know about subsequent event after the date of auditor's report and even after the issue of the financial statements, that means by the time you got to know about the subsequent events, financial statements are already issued. Now you are landing in trouble. Now you will land in trouble. Okay, but case 1, in case 1 also have some responsibilities, in case 2 also have some responsibilities, but case 2 is very severe than when compared with case 1. So first I will talk about case 1, facts which become known to the auditor's knowledge before the financial statements are issued. That means by the time you got to know about subsequent event, financial statements are not yet issued. See, practically speaking, the moment you have signed the auditor's report before the date of issue of the financial statements, you are not required to do anything unless a fact came to the auditor's knowledge, which if you feel that had I known about this fact at the time of auditor's report, I would have amended the auditor's report. Such a fact came to your knowledge. Then what you will do? So in case 1, what you will do is, in case if the fact has come to your auditor's knowledge before the financial statements are issued, first what you should do is discuss that matter with the management. Whatever fact which came to your knowledge, go and discuss that matter with the management. As a part of that discussion, determine whether financial statements need amendment. as a part of the discussion, determine whether financial statements need any amendment. Determine it. Thereafter, inquire whether management is ready to amend the financial statements. So first you will discuss, out of the discussion some outcome will be there. Let us say, for example, as a part of the discussion you have determined that yes, this adjustment, because of this fact, financial statements are required to be amended. You have decided. Now you have to inquire the management, are they ready to amend the financial statements or not? Now you have to inquire the management whether they are ready to amend the financial statements or not. Now when you inquire the management whether they are ready to amend the financial statements or not, two outcomes could be possible. What are they? Management is a good management, they have agreed to amend the financial statements. Other case, management is a bad management, they are saying that no, we will not amend the financial statements, do whatever you want. So first case, let us come to the comfortable case. What is it? So I discuss the matter with the management. I determine financial statements need amendment. I inquire the management whether they are ready to amend the financial statements, and they are ready to amend the financial statements. Management has amended the financial statements. Let us say even from the law or regulation, they are permitted to amend the financial statements also. So in case if they are amending the financial statements, now what is their responsibility? So management will amend the financial statements only when they are permitted by law or regulation. So when the management is amending the financial statements, what do you do? So you should perform audit procedures related to that amendment. Whatever management has done the amendment, on that you have to perform audit procedures. And also you have to obtain sufficient and appropriate audit evidence regarding that amendment, whether they have done the amendment properly or not. Regarding that, you need to obtain sufficient and appropriate audit evidence. So now you will perform audit procedures. You will obtain sufficient and appropriate audit evidence. Let us say, for example, management has done the amendment correctly. So you decided that financial statements need amendment, management has done the amendment, and you have performed audit procedures on the amendment, you obtained sufficient and appropriate audit evidence, you felt that everything is okay, management has done the amendment properly. Now, will there be any impact on your opinion? Will there be any impact on your opinion? No. You need not modify your opinion. But here you have some responsibilities. So here I have given the star mark here. So that refer to the star mark here at the bottom I have given. Okay, you will not modify your opinion, but will there be any impact on the auditor's report? Yes, there will be an impact of auditor's report. Sir, what will be that impact? Number one, see, you have, let us come back to this scenario. You have already 31st of March 2026 balance sheet date. Management approved the financial statements on 15th of April. You gave the earlier audit report on 20th of April. Now thereafter, after 20th of April, let us say before issue of the financial statements, on 22nd of April 2026, you got to know about fact. Now you discussed that with the management. You decided that amendment is needed. Management will amend the financial statements. Thereafter, they will get it approved. Let us say, for example, they have approved it on 25th of April 2026. They have approved it. But what is your auditor's report date? See, the old audit report will remain relevant because you are not required to modify. Management is anyhow amending the financial statements. You are not required to modify. Sir, will there be any impact on my auditor's opinion? No, you need not require to change your opinion. You have already given your audit report here. You have given your unmodified opinion when you have given that audit report on 15th of April 2026. Are you required to modify the opinion? No, because management has amended the financial statements. But there is one problem. What is that problem? You gave your auditor's report already on 15th of April. But the management will amend these financial statements once again and get it approved once again on 25th of April. So now what they will say is, one suggestion they are giving you, two things they are asking you to do. One thing what you do is, you mention this date as it is, 15th of April 2026 original date. You add one more date. 25th of April 2026, subject to the matter so and so, with reference to 25th of April 2026, with reference to the matter in so and so note number. That means that adjustment reference you give it in the financial statements. So this is what we call it as dual dating. Provision. So what you do? You need not change your opinion when the management has amended the financial statements. But what you are required to do is, you are required to add one more date. So at the date you will mention the auditor's report, this date will be there. Below that you will mention one more date, 25th of April 2026, with respect to the matter so and so note number, That means wherever that amendment has been done, that note number you will give the reference here. Clear? So that is one option you are required to do. So impact on the auditor's report, amend the report to include the additional date. So you amend the report not to change your opinion. What you simply do is amend the report to include an additional date to indicate that auditor's procedures are restricted to the amendment as described in the relevant note. So you are adding that one more date, 25th in your audit report. Why? Because what is the relevance of this date? You are saying that I have performed some audit procedures till 25th of April only on that amendment. So whatever amendment has been done, on that amendment I have performed the audit procedures as on 25th of April. So like that you do the dual dating. Or one more option also they are giving it to you. see, if you don't want to confuse, if you don't want to include two dates in your audit report, you do one thing, provide a new audit report. So what they're saying here, provide a new audit report without changing opinion. Don't change the opinion. Whatever previous audit report is there, take that audit report, but amend it. So what you will amend, you will include an emphasis of matter paragraph or other matter paragraph conveying audit procedures on the subsequent events are restricted solely to the amendment. That means you include an emphasis of matter paragraph, other matter paragraph. There you include, there you say what is that amendment management has done and what audit procedures you have performed on that amendment. So do any of this. Do any of this. So that's what they try to say it here. So once again, if I tell you where we are all, so in case if you come to know about any fact before the financial statements are issued, discuss the matter with the management, determine whether financial statements need amendment, inquire whether management amends the financial statements. If the management has amended the financial statements, perform audit procedures related to that amendment, obtain sufficient and appropriate audit evidence regarding that amendment. Are you required to modify the opinion? No, I'm not required to modify. But in your audit report, some changes you are required to make. What changes you are required to make? Number one, either you have to change add one more date, or what you do is provide a new audit report including an emphasis of matter paragraph or other matter paragraph conveying what audit procedures you have performed on that amendment. That's all. Any of this you can do. Now coming to the other case, see, this is favorable scenario. We have one more complicated scenario. What is that complicated scenario? Management does not amend the financial statements. Management is not amending the financial statements. Sir, what if the management is not amending the financial statements? In that case, what you are required to do? If the management amended, we have done that. In case if the management is not ready to amend the financial statements, what you have to do? Two things here. Here you have to change your opinion. If you decided that there is a subsequent event and financial statements need amendment, you are asking the management, sir, will you amend it or not? Management told no, we will not do the amendment. Now you have to modify your opinion. Your audit report will not work. But here there could be two scenarios. See, management is not ready to amend the financial statements. We have already signed the audit report, but audit report is not yet given to the management. You signed audit report, but audit report is not yet given to the management. You signed audit report today or tomorrow you wanted to give, but in the meantime you got to know about subsequent event. You discussed with the management. You asked the management whether they will amend the financial statements or not. They said no, but you are in a comfortable position because audit report you did not hand it over. You signed it okay, but you did not hand it over to the management. What you do? Throw that audit report, give a new audit report containing a modifying opinion. Very simple, because you did not give the audit report. No, simply whatever audit report which is available with you, tear that audit report and give a new opinion, give a new audit report containing a modified opinion. Don't write all this, tear the opinion, throw it in the dustbin, just as a flow I have told. So you have to give a modify the opinion and give the audit report. Sir, what if audit report is already given? Sir, I signed audit report. I gave it to the management also. Now I asked the management to amend. They are saying no. Now what I should do, sir? Now what you should do is first instruct the management, sir, don't circulate the audit report. I gave you the audit report. No, please don't circulate because you are not amending the financial statements. No, don't circulate. Stop. I will give a new audit report containing a modified opinion. Then only do the circulation. But management is very cunning. They did not listen to you. They have circulated. Cheating, no. I told them, sir, don't circulate the audit report. I will give you a new audit report containing a modified opinion. Till that point of time, don't circulate. Management did not listen only. They are doing what they are doing, the circulation. Even after saying it also, they are circulating that audit report. They are circulating it. They are circulating. Then what I should do? I should take the appropriate action. I should take appropriate action to stop the people from relying on the auditor's report. I should take appropriate action to stop the people from relying on the audit report. So what could be the appropriate actions? Sir, give a press note or inform to the or make make the company to post an update on their official website or inform to the SEBI, whatever it is. Take appropriate action to stop the people from relying on that auditor's report. Then you give a new audit report containing a modified opinion and ask the management to circulate it. Clear? Able to understand? So this is what you are required to do in case if the management does not amend the financial statements. Here also I have given you the breakup. Two scenarios could be there. If you have not yet given the report to the management, well and good. Give a new audit report containing a modified opinion. If you have already given it, first go and request them. Don't circulate it till I give the new audit report. Without listening to you, if they have circulated, you take appropriate action to stop the people from relying on the auditor's report. Finally, give a new audit report containing a modified opinion and that the management should circulate it. Now, sir, let us come to the next complicated case. What is the next complicated case? Sir, you got to know about subsequent event. But by the time you got to know about subsequent event, financial statements are already issued, sir. By the time you got to know about subsequent event, financial statements are already issued, sir. Now what I should do? Here also same 3 steps. Discuss a matter with the management, determine whether financial statements need amendment, inquire the management whether they are ready to amend the financial statements or not. And as a part of the discussion, if you have decided that financial statements need amendment, as a part of the discussion, if you have decided that financial statements need amendment, then what you should do is first ask the management to take appropriate action to stop reliance on the audit report, because it is already circulated now. Financial statements are already issued. Now you got to know subsequent event. And if you have decided that financial statements need amendment, but by the time you got to know financial statements audit report have already gone to the third parties. So first what you should do is go and instruct the management, go and ask the management, sir, please take some appropriate action to stop the people from relying on the auditor's report. Sir, what could be the appropriate action? Once again, that press release or update on the website, sending the email, whatever it is, ask the management to take appropriate action to stop the people from relying on the auditor's report. In case if the management is not taking appropriate action, then the standard says if the management doesn't take appropriate action, as an auditor, you yourself shall take the appropriate action. As an auditor, you yourself shall take the appropriate action to stop the people from relying on the auditor's report. Now, whatever it is, first someone should take action. If the financial statements need amendment, either the management or the auditor, someone should take an action to stop the people from relying on the auditor's report. Now next step, sir, now you have to assess whether management is agreed to amend the financial statements. Yes sir, management is amending the financial statements. Once again, perform audit procedures related to amendment, obtain sufficient and appropriate audit evidence. Now you have to give a new audit report. Management amended financial statements. We have agreed also. We have checked the financial statements also. They have done the amendment properly. But you will not modify the opinion. But still, old audit report will not be valid. Why? Because here the standard says asking you to give a new audit report without any modification on the opinion. But you have to include an emphasis or other matter paragraph to highlight the effect of amendment. Management amended, okay. You did not give modified opinion, but this newly amended financial statements will be once again issued now with a new audit report. No, people will be confused. Sir, old audit report is there, new audit report is there. Old financial statements are there, new financial statements are there. What is the difference? Like that, people might get confused. No, so in that case, that's why what they're asking you, give a new audit report containing an emphasis or other matter paragraph to highlight the effect of that amendment. You have to give it. Understood? Next. Sir, what if management doesn't agree to amend the financial statements? Very simple. Here you have to give a new audit report which contains a modified opinion, either qualified or adverse opinion you have to give. Explain the reason for that modification in either basis for modified opinion paragraph. In the basis for modified opinion paragraph. Now you will give modified opinion. No. So you have to give either a qualified or adverse opinion because management is not amending the financial statements. Reason why you are giving that qualified or adverse opinion, that basis you explain it in the modified opinion paragraph. No need to include here any emphasis or other matter. Why? Because anyhow you are giving a new audit report containing a modified opinion. Reason also you will try to explain it in the basis for opinion paragraph. So that's why no need to include any special emphasis or other matter paragraph in this particular case. Clear? Right. So this is what regarding SA 560. SA 560 subsequent events. Okay. Right. Now let us proceed ahead. Let us try to proceed ahead. So 560 we have completed. Now we will try to do SA 570. Let us try to understand what is this SA 570. So SA 570 is a standard which is going to talk about the going concern. So what does this SA 570 say? See, first, as we all are aware, going concern is one of the fundamental accounting assumption. And what do you mean by going concern assumption? That entity will be able to continue for the foreseeable future. What is that foreseeable future? Within the next 1 year, the entity will continue. There is no requirement to close down or shut down the business. That assumption, we call it as fundamental accounting assumption. It is very important. Why? Because till the time going concern assumption is valid, till that point of time only, we can continue to value our assets at historical cost basis. The moment the going concern assumption becomes invalid, the moment the going concern assumption becomes invalid, in that circumstances, you need to prepare your financial statements on liquidation basis. In case if the going concern assumption is invalid, you are required to prepare the financial statements on liquidation basis. Sir, what do you mean by liquidation basis? That means in case if the going concern assumption is invalid, you have to prepare financial statements assuming that all the assets and liabilities will be discharged as on the date of balance sheet date. At realizable value, you have to measure all your assets and liabilities. The differential between carrying value and realizable value, you have to take it to the statement of P&L. So like that, you have to prepare on liquidation basis if the going concern assumption is invalid. So all this I have given it in the meaning of going concern and its significance. So whatever I have told you till now, what is the importance of going concern, how it will have an impact on the financial statements, whatever I have explained, that you will be able to find it in this paragraph. Now, so use of going concern assumption. But before that, let me tell you this. Management's assessment of entity's ability to continue as a going concern. So let me tell you one point here. It is whose responsibility to make an assessment regarding going concern? Whether going concern assumption is valid for the entity, whether going concern assumption is not valid for the entity, it is whose responsibility to make the assessment? the responsibility for making an assessment regarding entity's ability to continue as a going concern is always going to rest with the management. It is a responsibility of the management to determine whether the entity will be able to continue as a going concern or not. That responsibility will always lie with the management. Then what is auditor's responsibility? Whatever assessment management has done regarding the going concern, whether that assessment is valid or not, that I need to obtain sufficient and appropriate audit evidence. Listen carefully, very important. The primary responsibility for making an assessment regarding entity's ability to continue as a going concern. The primary responsibility for making an assessment regarding entity's ability to continue as a going concern. The primary responsibility is going to rest with management. The primary responsibility is going to rest with the management. Then what is the auditor's responsibility? So auditor's responsibility is to analyze, is to obtain sufficient and appropriate audit evidence. Whatever assessment management has done regarding going concern, is it valid or not? In case if the management is saying going concern assumption is valid, now I have to obtain sufficient and appropriate audit evidence whether management's assessment is valid or not. In case if the entity says entity will not be able to continue as a going concern basis, I need to obtain sufficient and appropriate audit evidence whether management's assessment is correct or not. That is what my responsibility is. Okay, so one thing we got it clear. One thing we have got it clear. So management is primarily responsible for making an assessment of going concern. Now on what basis management will do it? So management is primarily responsible to decide whether entity will be able to continue as going concern or not. Now on what factors management will decide whether entity will be able to continue or not? So on different factors like degree of uncertainty, they will check is there any uncertainty associated with an outcome of an event or condition, like is there any pending case. So because of that pending case, is the outcome is so unlikely that we might go out of the business. Those factors they will consider. Size and complexity of the entity, nature and condition of its business, and even they will pay attention to the external factors like laws and regulations. So considering all these factors, the management will make an assessment regarding entity's ability to continue as a going concern. So that's what I have given it here. Okay, so this is management's responsibility. So now what is auditor's responsibility? Okay, fine. You told management is responsible for making an assessment, for deciding whether entity will be able to continue as a going concern or not. That management will do. And while taking that decision, all these factors they will consider. Okay, management will do assessment. Now, what is auditor's responsibility? To obtain sufficient and appropriate audit evidence. To obtain sufficient and appropriate audit evidence regarding what, sir? Regarding appropriateness of management's use of going concern assumption. So whatever going concern assumption management has made, whatever going concern assumption management has made, whether that is valid or not, whether that is appropriate or not, regarding that I need to obtain sufficient and appropriate audit evidence. Sir, how will I get sufficient and appropriate audit evidence, sir, regarding management's ability to continue as a going concern? Don't worry, in the same standard they have told us what audit procedures I have to perform to obtain that sufficient and appropriate audit evidence regarding entity's ability to continue as a going concern. And on the basis of that procedures, in the process of that obtaining sufficient and appropriate audit evidence, you determine whether there is any material uncertainty relating to going concern. I will come to this point. What is this material uncertainty relating to going concern? I will come to this point. So first you have to obtain sufficient and appropriate audit evidence regarding appropriateness of management's use of going concern assumption. Now depending on in that process, determine is there any material uncertainty relating to going concern, and accordingly you have to fulfill your reporting requirements. Accordingly, you have to fulfill your reporting requirements. So what are that reporting requirements? That also we are going to see it in a while now. So what are that audit procedures I have to perform? Now, in order to obtain that sufficient and appropriate audit evidence, whatever audit procedures you have to perform, that I'm going to divide into two categories. Risk assessment procedures and further audit procedures. So whatever audit procedures you have to perform in relation to going concern, that I'm going to divide into two categories. One is risk assessment procedures, other one is further audit procedures. So first let us see what risk assessment procedures you have to perform to determine whether going concern assumption is valid or not. Number one, the auditor shall consider whether any event or condition is existing that may cast a significant doubt on entity's ability to continue as a going concern. So they are asking you to find out risk assessment. In the risk assessment procedures, what we do, we find out risk of material misstatement. That's what they're asking you to do here. You find out, is there any event or condition which is creating a doubt that entity might not be able to continue as a going concern. So in the risk assessment procedures, we try to identify whether there is any event or condition that casts a significant doubt on entity's ability to continue as a going concern. That means, is there any event or is there any condition which is creating a doubt in the mind of the auditor that a going concern might not be valid? So search for that events or conditions. Sir, what are those events or conditions which give a doubt regarding entity's ability to continue as going concern? That also you need not apply your mind. That also standard itself is giving. So sorry for the audio interruption. So let me continue further. So as I have told, whatever audit procedures you are required to perform regarding going concern, those audit procedures I can divide into two categories. One is risk assessment procedure and the other one is further audit procedure. So risk assessment procedures means they are asking me to identify, is there any event or condition that may cast a significant doubt on entity's ability to continue as a going concern. So first to find out the risk, is there any event or condition which is casting a significant doubt on entity's ability to continue as a going concern. So as I was saying, sir, what are that events or conditions which cast a significant doubt on entity's ability to continue as a going concern? That also you need not break your mind. That also you need not apply your mind. Why? Because the standard itself is saying. So these are the examples of the events or conditions that may cast doubt regarding entity's ability to continue as a going concern. So those events and conditions are divided into three categories: financial indicators, operating indicators, other indicators. Sir, what are financial indicators? Net liability position. Always the company is in net liability position. Borrowings are approaching maturity without any prospects of repayment. Negative cash flows, continuous negative cash flows, or withdrawal of financial support. Your creditors, your lenders are withdrawing their financial support. They are no longer ready to give you the loans. Or adverse financial ratios, very bad financial ratios you are having. So these are financial indicators. Now there will be some operating indicators which will create a doubt that entity might not be able to continue as a going concern. Sir, what are operating indicators? Management itself wants to liquidate. Loss of key management, they are losing the key management. Labor difficulties are there. Shortage of supplies is there, or successful competitor has come. So these are operating indicators, and even there could be other indicators also. That means your client is not complying with the laws. Pending cases are there against the company. Uninsured catastrophes, the client has gone through catastrophe for which they don't have any insurance, or there might be a changes in the laws or regulations. So like that, simply if I have to put it, while performing risk assessment procedures, you should identify any of these events or conditions are present which will create a doubt on entity's ability to continue as a going concern. Sir, how will I get to know whether these indicators are there or not? Simply the standard says inquire the management. Simply they're asking you what simple step I have to do in order to know whether any events or conditions are present or not. Simply go and inquire the management. So now by inquiring the management, two outcomes could be there. Yes, you are able to identify some events. You are able to identify some financial, operating or other indicators. Then what you will do? You should perform further audit procedures. What you should do? You should perform further audit procedures. Sir, what are that further audit procedures that we are going to see? So in case if you have inquired the management, by inquiring the management, if you are able to find any of this financial, operating or other indicators, then what you should do? Then you should proceed with the further audit procedures. A question should pop up in your mind. Okay, sir, I inquired the management, but I'm unable to find financial, operating or other indicators. Then what I should do? Stop it there itself. Stop it there itself. No responsibility to perform the further audit procedures. So you should continue and perform the further audit procedures. Only on inquiry, you got to know that there are some financial, operating or other indicators. If there are no financial, operating or other indicators, you need not perform further audit procedures. Stop it with the risk assessment procedures only. That's it. Enough. Legs. If at all you find any event or condition that cast a doubt on entity's ability to continue as a going concern, then you will perform further audit procedures. Sir, what are that further audit procedures? So these are the further audit procedures. Request the management to make an assessment if not done. If the management has not already done an assessment regarding going concern, first to go and ask them. To do the assessment. Evaluate management's plans for future. So you have to evaluate, you have to analyze what are the management's plans for future action, because I am able to find some operating, financial or other indicator. Analyze the cash flow forecast. Generally they will prepare a cash flow forecast, how the next 1 year cash flow will look like. Analyze that cash flow forecast. Request a written representation. Ask the management to give the written representation. Analyze their profits and cash flows. Read the latest interim financial statements. Inquire the entity's legal counsel. Inspect the loan agreements and read the minutes of the board of directors meeting. So you will perform further audit procedures. Now, after you have performed the audit procedures, now you will have the findings. After you have performed all the audit procedures, now you will have findings. Now, according to that findings, you have to report. You have to fulfill your reporting requirements. So once you have performed risk assessment procedures, once you have performed the further audit procedures, now depending on your findings, you have to fulfill your reporting requirements. Sir, what could be that reporting requirements? See, once you have done your further audit procedures, you might be left with various conclusions. Number one, going concern is appropriate. Management has prepared the financial statements on going concern basis. No issue regarding going concern. Will you have any specific responsibilities? No. Give your usual opinion and close the matter. Unmodified opinion will close the matter. That doesn't require any separate discussion. If you perform risk assessment procedures, if you perform further audit procedures, and if you have decided that no going concern assumption is 100% valid, the management has also prepared the financial statements on going concern basis. No issue, no trouble, nothing. You will give unmodified opinion. That case doesn't require any special discussion. When case requires special discussion, let us say for example, you found that going concern assumption is inappropriate. after you have performed all the audit procedures, you decided that going concern assumption is inappropriate. That means entity will not continue for the going concern. Entity will not continue for the next 1 year. Going concern is inappropriate. You have decided. You have obtained sufficient and appropriate audit evidence. Then what I should do? Directly modified opinion? No, not required. So when you found out that going concern assumption is inappropriate, you have to check whether adequate disclosure is given in the financial statements or adequate disclosure is not given in the financial statements. Sir, who will give disclosure? Management. Going concern assumption, if it is inappropriate, you have to check whether appropriate disclosure has been given in the financial statements or not. Who will give the disclosure? Management. Adequate disclosure has been given. Management did not hide anything. They have given adequate disclosure. What do you mean by giving adequate disclosure here? That means management has also accepted going concern assumption is invalid. They have prepared all their financial statements on realization basis. They have shown their fixed assets, liabilities, current assets, everything on realizable value. Differential they have taken to the statement of P&L also. And in the notes to accounts, they have clearly explained that we are not able to continue as a going concern. Management did not hide anything. They have adequately given the disclosure in the financial statements. Then what you will do? You will give an unmodified opinion. What you will give? You will give unmodified opinion. No need to modify your opinion. But you do one more thing here. You can use an emphasis of matter paragraph to highlight the inappropriate going concern. You need not modify because management did not hide anything. You give unmodified opinion only. But add an emphasis of matter paragraph where you will highlight, you will bring this matter to the user's attention that the entity will not be able to continue as a going concern, and management has given clear disclosure about this in so and so note number. Please go and refer that note number, like that, include that inappropriate going concern reference in the emphasis of matter paragraph. In case if the management has not given adequate disclosure, sir, what is the meaning of this? You have decided that going concern is invalid. Entity will not continue for the next 1 year. But management did not give adequate disclosure. What do you mean by management not giving adequate disclosure? Management is still continuing to prepare their financial statements on going concern basis only. Then straight away, no second thought, go and give the adverse opinion. Go and give the adverse opinion. No second thought, directly give the adverse opinion. So this is one case. This could be one possible outcome. Sir, what is another possible outcome? There is a material uncertainty relating to going concern. Sometimes, as a result of performing audit procedures, you might be left with the observation that there is a material uncertainty relating to going concern. Sir, what do you mean by material uncertainty relating to going concern? You are unable to decide whether entity will continue for the next 1 year or not. Even management is not able to decide. Might be they are going through some pending case. We don't know what is the outcome of the case. In the next 1 year, if the court judgment comes in favor of the company, entity will continue. If in the next 1 year, if the court judgments comes against the company, they have to wind up. So like that, whether entity will be able to continue or not, that is depending on one material uncertainty. In that case, what you should do here also, what you should do is you have to check whether there is an adequate disclosure given in the financial statements or no adequate disclosure given in the financial statements. Sir, adequate disclosure has been given in the financial statements. That means management did not hide anything. Whatever uncertainty they are facing, that they have clearly explained in the notes to accounts. Then what I should do? Here also give unmodified opinion because management did not commit any mistake. Give an unmodified opinion. But in this case, the standard says use a specific paragraph with the heading material uncertainty relating to going concern. So here they are asking you to use a specific paragraph. Use a specific paragraph with the heading material uncertainty relating to going concern paragraph to highlight that uncertainty. So there is one doubt in the comment section. I will take it. Just first let me complete it. So in case if adequate disclosure is given in the financial statements, give unmodified opinion, but use material uncertainty relating to going concern paragraph to highlight that uncertainty. Sir, can't I do it in emphasis here? No. Sir, previous case I used emphasis. No. Can't I use emphasis here? No, don't use this. Don't use it. Because standard has specifically asked you to use this paragraph. Use this paragraph only. Sir, what if no adequate disclosure is given? In case if no adequate disclosure is given, then we'll directly give modified opinion. Which kind of modification? Either qualified opinion or adverse opinion you have to give. Why? Because management did not disclose the material uncertainty relating to going concern. You have to give the modified opinion and you have to explain the reason for that modification in the basis for modified opinion paragraph. You have to explain that reason in basis for modified opinion paragraph. So this could be one more outcome. Sir, one more last outcome what could be possible is, sir, management is not sharing their assessment only. Management will do the assessment regarding their ability to continue as a going concern. They should share that assessment with me so that I can perform the audit procedures and I can obtain sufficient and appropriate audit evidence. But management is unwilling to make their assessment only. They have made an assessment regarding going concern. I'm asking them, sir, please share your assessment with me. I will analyze whether whatever assumption you have made, whatever assessment you have made regarding going concern, is it valid or not? I will analyze. For that, I want your assessment. But management is saying, no, we will not share your assessment with you. In that case, the standard says this will be a typical case of non-availability of audit evidence where you are required to give either a qualified opinion or disclaimer of opinion. Because it is a case of non-availability of audit evidence, so we have to give a qualified opinion or disclaimer of opinion. I think the doubt which is there in the comment section, that have been answered. Because in case if the management is not making it is not willing to share your assessment, you are unable to perform audit procedures. No, if the management gives the assessment, you will perform audit procedures, you will have evidence. If the management is not giving assessment only, you are not in a position to perform audit procedures. If you are not in a position to perform audit procedures, you are unable to obtain sufficient and appropriate audit evidence. If you are unable to obtain sufficient and appropriate audit evidence, it will go to qualified or disclaimer. Why adverts will come? Adverts will come when, so there was a one doubt in the comment section which says that, sir, why adverts opinion is not given when management is unwilling to make its assessment? That doubt I am answering. See, adverts opinion when you will give when you have sufficient and appropriate audit evidence. But here you don't have sufficient and appropriate audit evidence. No. So that's why adverts opinion will not be given. Either a qualified or disclaimer of opinion will be provided. Hope that students' doubt has been addressed in the comments section. Clear? Right. Perfect. So with this, we have completed all the 500 series. All the 500 series of the standards we have covered. So now what we will try to do is we will try to go to 200 series. 200 series of the standards we will take one by one and we'll try to revise them. Okay, right. I hope you're all enjoying this revision session. I hope you're all enjoying this revision session. I hope that this is definitely creating some value addition in your preparation. That's what the whole objective has been. It should ultimately somehow benefit you. So with that objective itself, we are doing it. So I hope that you're all getting benefited out of this and you're all enjoying it. I hope I'm able to make you revisit all that conceptual clarity, whatever you require for answering the questions in the exam. Good. Excellent. One more question in the comment section. See, just let me take this doubts, no, that will actually help you out. Sir, if the management is unable to obtain sufficient and appropriate audit evidence, it should lead to disclaimer, no? It should lead to disclaimer, no? Why qualified? Excellent question. Excellent question. I was waiting for this. See, sir, when the management is unable to obtain sufficient and appropriate audit evidence, and if the possible effect of that undetected misstatement is material and pervasive, it should directly lead to disclaimer, no, sir? We have read in the audit reporting chapter, no. If you are unable to obtain sufficient and appropriate audit evidence and the possible effect is material and pervasive, it should lead to disclaimer, no. Yes, even I agree with you. Even I agree with you. Here it should be disclaimer. It should be disclaimer. Yes, disclaimer of opinion. 99% of the cases, disclaimer. But why qualified is, I will tell you why they have told you qualified is. Let us say, even though management did not share the assessment also, on the basis of your procedures, mostly you are able to find that going concern is valid only. But some portion, little doubt you have, very little doubt you have regarding that you need management assessment, but the management is not sharing it. So there is a non-availability of audit evidence, but the possible effect of that non-availability of audit evidence could be only material but not pervasive. So mostly you are able to obtain evidence on your own, even though management is not sharing assessment. Depending on all your audit procedures, mostly you are comfortable that entity will continue as a going concern. But still they are not sharing their assessment. Here you might come to a conclusion that the possible effect could be material but not pervasive. Then there could be a chance of giving disclaimer of opinion. But according to me, 99% of the cases, since there is a going concern issue, which is a fundamental accounting assumption, disclaimer of opinion always should be appropriate. Disclaimer should be appropriate. But just in case if you feel that non-availability of audit evidence is material but not pervasive, because most of the evidence you are able to obtain on your own and you are concluding that going concern assumption is mostly valid, only little doubt I have, there you can conclude that possible effect of non-availability of audit evidence is material but not pervasive, and you can give a chance of that qualified opinion in 1% of the cases, but 99% of the cases disclaimer will remain valid. I hope this doubt is also cleared, right? Nice. So this is what the advantage of having the online live sessions. That's why I'm preferring. These days, even I'm running my batches also online live only. Just give me 1 minute. Material and pervasive case disclaimer. No, material and pervasive case is always going to be disclaimer. That anyhow I have told. No, ba, you are once again confusing. See, why adverts will come? Why adverts will come if it is material and pervasive? There should be availability of audit evidence. No, adverts can be given. See, to give adverse opinion, multiple conditions must be present. Yeah, now you got the point. Super. Super. Nice. Okay. Right. Perfect. So now let us come to the next standard. So first we'll try to cover some simple standards we'll try to do. SA 260 we'll try to do. So what is this SA 260? SA 260 is a standard which is talking about communication requirements of the auditor with those charged with governance. So as per SA 260, one of the general responsibility. So if you refer 200 series of the standards will be talking about general responsibilities of the auditor. So now as a part of the general responsibility, one of the general responsibility which auditor will have is he is required to fulfill some communication requirements with those charged with governance. He is required to fulfill some communication requirements with those charged with governance. First of all, we should know who is those charged with governance. Who is those charged with governance? I always use one simple phrase to describe the term those charged with governance, who is a top level management. Who is a top level management, highest level. But they have defined this term technically. What is the meaning of those charged with governance? Is those persons or organizations with responsibility for overseeing strategic direction. Those who have the responsibility for overseeing strategic direction. That means they are the people who take decisions strategically, where the company should invest, that what should company should do with their profits, should they reinvest it or should they distribute it as dividends, where they have to expand, where they have to make their investments. So whoever is having the responsibility of taking this strategic decision, those who is overseeing the strategic direction of the company, and those who have obligations relating to accountability. Those who have obligations relating to accountability. That means if something goes wrong in the organization, who has to be accountable for that? Who has to take all that responsibility for it? Who is accountable? Those people who we call them as those charged with governance. So this definition we have to remember. So who is those charged with governance? Those persons or organizations who is having the responsibility for overseeing strategic direction of the company, and those who are having the responsibility for fulfilling the obligations relating to accountability. See, there is often confusion between management and those charged with governance. There is often confusion between management and those charged with governance. Why? Because in small organizations and all, you can easily bifurcate who is management, who is those charged with governance. Basically, those charged with governance are the people who look after strategic direction, who are accountable. But whoever is executing the responsibilities at the ground level, whoever is executing the responsibilities, that we call them as management. See, in small organizations, we can bifurcate between management and those charged with governance. But in large organizations, this differentiation becomes very limited. Why? Because if you take big companies and all, if you take especially this companies and all, there will be board of directors. The board of directors only will look after the strategic direction. Like I have told a few decisions, like what they have to do with the profits, where they have to invest the money, which company they have to acquire. So strategic direction will be decided by board of directors. They will only fulfill the responsibility of even accountability also. But if you look at some companies, these board of directors also will play the role of management. So one of the board of director will be operating head, one of the board of director will act as a CEO, one of the board of director will act as a managing director, one of the board of director will be a director of finance. So like that, these board of directors only will take the management responsibility also. So that's why in many organizations that there is a very thin line of difference will be there between board of directors and those charged with governance. But in some organizations, both the roles are played by same people. Both the roles are played by same people also. Yes, that is also possible. So those charged with governance and management, both the roles could be played by same persons also, because especially companies, that only will happen. So board of directors only will look after the strategic direction. Board of directors only will look after the account, will take the accountability responsibility, and these board of directors only will become the heads of the department, and even they will fulfill the management responsibility, execution responsibility also they will fulfill. So point which I want to make here is, yes, in some organizations you can clearly bifurcate between who is management, who is those charged with governance. But in some organizations, we are not able to draw that line between management and those charged with governance, because both the roles are played by the same person. So this is what the point I want to conclude. So final summary, there could be some organizations where management and those charged with governance, both the roles could be played by a single team of people. Possible? 100% possible. 100% possible, right? Okay, we have understood who is those charged with governance. Now, what are the objectives of the auditor as per SA 260? As I've already told you, as per SA 260, you should ensure effective, as an auditor, you should ensure effective communication with those charged with governance. So what are the objectives of the auditor as per SA 260? Number one, you have to communicate with those charged with governance. As an auditor, it is your primary responsibility to do communication with those charged with governance regarding responsibilities of auditor. As an auditor, what will be your responsibility? And you have to communicate with them overview of planned scope and timing of the audit. How are you planning your audit? What is your scope of audit? Overview, just a overview once again, not detailed plan. Why? Because discussion of detailed audit plan with the management will make your audit ineffective. Somewhere we have learned in the audit strategy planning and program. So you should not discuss detailed plan and scope of audit. You have to give an overview of planned scope and timing of the audit. So first objective, you have to communicate with those charged with governance regarding your responsibilities. So what are your responsibilities that you have to communicate, and also communicate with him overview of planned scope and timing of your audit. So what will be your planned scope and timing of the audit, that also you have to communicate. Now, if you go a little deeper into this, sir, you are asking me, one of the objective is you are asking me to communicate with those charged with governance regarding responsibilities. Sir, what responsibilities I have to communicate, sir? Specifically, what I have to communicate? When you are saying I have to communicate my responsibilities, what exactly I have to communicate regarding my auditor's responsibility? That is what they say here. When I say you have to communicate auditor's responsibilities, what you should do is you should say that as an auditor, you are responsible to form and express an opinion. Tell them this is your responsibility. Dear sir, dear those charged with governance, when I say my responsibility is to form and express an opinion. I will form an opinion on your financial statements and I will express that opinion on your financial statements also. And also you should add one more line to that. Audit does not relieve the management or those charged with governance of their responsibilities. You should also tell them that, sir, just because we are doing audit, that will not relieve you. Just because we are doing the audit, that will not relieve the management or those charged with governance of the responsibilities. Will be no reduction of your responsibilities. Just because we are appointed as an auditor, there will be no reduction in the responsibilities of management and those charged with governance. You will still be liable to prepare the financial statements. You will still be liable for implementation of internal controls. That is still your responsibility. Okay, so this is what regarding auditor's responsibilities. This is what specifically you are required to communicate. Then, sir, you are asking me to communicate overview of planned scope and timing of audit also. Sir, what I have to communicate regarding overview of planned scope and timing? So here they say, discuss with those charged with governance overview of planned scope and timing of audit, including communication of significant risk. Even you have to communicate with him, even you have to communicate with those charged with governance, what and all are the significant risk which you have identified during the course of audit. So this is what the first objective, communicate with them, those charged with governance regarding your responsibilities, and also communicate with them overview of planned scope and timing of the audit. Next, okay, first objective we are done. See, communication from your side alone will not be enough. You have to make sure that you're also getting relevant information from them. So one side of communication alone will not be enough. You will communicate your responsibilities and overview of planned scope and timing of the audit. Even you should obtain relevant information from those charged with governance. It should not be one-way communication. Whatever information you want from those charged with governance, that also you have to obtain. Next, you have to provide those charged with governance with timely observations arising from the audit. During the course of your audit, whatever observations you are coming across, those observations also you are required to communicate with those charged with governance on a timely basis, in a timely manner. Whatever observations you are having from the audit, that also you are required to communicate with those charged with governance. So now, what about this timely observations? When you say timely observations, what exactly I have to communicate? So that is what I am coming to the third point here. Significant findings from the audit. When you are doing the audit, whatever your significant findings are there, all that significant findings you have to communicate. Sir, any examples? Yes. So significant qualitative aspects, you are required to communicate with the management regarding significant qualitative aspects like accounting policies, judgments and all that you have to communicate. Thereafter, you have to communicate inappropriateness of accounting policy. In case if a client is following some accounting policy, which is even as per applicable financial reporting framework also, but that is inappropriate for your client. If you have any observations on the accounting policy which a client is following as per applicable financial reporting framework, but in your opinion that accounting policy is inappropriate, if there is any inappropriateness of the accounting policy, that also you can communicate. Significant difficulties encountered as an auditor during the course of audit, if any difficulties you are facing, that also you go and communicate with those charged with governance. Unless all of those charged with governance are involved in the management, that means if management and those charged with governance both are not same people. If I told you, in some organizations, management and those charged with governance both are same people. Now they are saying unless all of those charged with governance are involved in management. That means if management and those charged with governance both are different, in that case, whatever matters you have discussed with the management, discussed with those charged with governance also. Whatever written representations you have requested from management, that you request from those charged with governance also. But this communication will not be required if management and those charged with governance both the roles are played by same person. Apply your common sense. So whatever matters you are discussing with management, whatever written representations you have requested from management, that they are asking you to communicate with those charged with governance also. When you will do, when management, those charged with governance roles are played by two different persons. If management, those charged with governance both are same people in the entity, then no need for separate communication because both are same. No. Next. And even you have to communicate with them circumstances that affect form and content of the auditor's report. Because of which circumstances you will change your audit report, what will be the format of your audit report, because of what factors you will change your form and content of the audit report, that also you have to communicate with them. Or any other significant matter as per the auditor's professional judgment. Not just the above, any other matter which in your professional judgment is significant, all that you are required to communicate it. Understood? So this is extension of the third objective. So in the third objective, what they are saying, you have to provide those charged with garnets with timely observations. So what are that examples of the timely observations? This one, significant findings from the audit you can communicate. And last objective, you have to promote an effective two-way communication by putting, you should put all your efforts to make sure that there is an effective two-way communication happening between you and those charged with garnets. That you have to make sure. So promote the effective two-way communication with those charged with garnets. So these are the four objectives, and elaboration of each of the objective also have explained. So one quick recap. So what are the objectives of the auditor as per SA 260? So you have to communicate with those charged with garnets regarding responsibilities of the auditor and overview of planned scope and timing of audit. Number 2, you have to obtain relevant information from those charged with garnets. Number 3, you have to provide them with timely observations arising from the audit, and you have to promote an effective two-way communication between the management and between the auditor and those charged with garnets. Then, in case if you are conducting audit of a listed entity, in case if you are calling an if you are conducting an audit of listed entity, even you have to communicate the auditor's independence also. In case of listed entities, you are required to even communicate auditor's independence also in case of listed entity. This is specific requirement in case of listed entities. So in addition to all the above, this will be an additional requirement in addition to all the above communication requirements. Usual matters, anyhow you will communicate. In addition to all the usual matters, in case if you are conducting audit of a listed company, even you have to communicate about auditor's independence also to those charged with garnets. So let us see what I have to communicate. So the auditor shall communicate with those charged with garnets that engagement team, his firm, his networking firms, everybody is complying with the ethical requirements. You have to tell him that, sir, myself, our engagement team, our firm, our network firm, everybody we are complying with the independence requirements and ethical requirements. And what relationships are there that might affect the independence? Are you doing any other relationships? Are you having any other relationships? Are you doing any other non-audit related assignments you are doing for your client or your client's holding subsidiary, or your network firms are doing any of that relationships which will have an impact on independence? So you have to provide them what audit services you are providing, what non-audit services you are providing, what is the fee for audit service you are charging, what is the fee for non-audit services you are charging. So like this, in case of listed company, you have to communicate with those charged with garnets regarding your independence requirement. It is mandatory in the case of listed companies. Then how you will communicate, sir? How you will fulfill your communication requirements, sir? In case of listed entity, you have to communicate in writing. This independence requirements you have no, compulsorily you have to do it in writing only. In written format you have to communicate. Sir, in case of other entities other than listed entities, they say here you have to do it in writing if you feel that oral communication is inadequate. Generally oral communication will always be inadequate communication only. So preferably always you have to do that communication in the writing format. Then documentation. Not just that, what and all matters you have communicated with those charged with garnets, everything must be included in the audit documentation also. So fulfill all your requirements, keep all that communication requirements in your audit documentation as well. So that tomorrow someone is coming and asking you, boss, have you complied with the SA 260 or not? You should be able to show your documentation and prove that, yes, I have fulfilled all the communication requirements, so that you can prove it. So that's why they are asking you to comply with SA 260. That's why they are asking you to include all of them in the documentation requirements. Now, let us come to SA 265. SA 265 is also a standard talking about communication requirements only. But SA 265 is a specific standard, is a special standard which is asking you to fulfill the communication requirements only regarding deficiencies in the internal control. SA 260 is a general standard talking about all your communication requirements, whereas SA 265 is a specific standard which is talking about communication regarding deficiencies in the internal controls. So as a part of your audit, if you are able to find out any deficiencies in the internal controls, that you are required to report it to management and those charged with garnets. So what you have to communicate with management, what you have to communicate with those charged with garnets, which deficiencies you have to communicate, that's what this standard says. So if I have to summarize this entire content of the standard in one simple paragraph, I will say that if there is a significant deficiency, the standard what simply says is, if you find any significant deficiency in internal control, report it to those charged with garnets. If there is any, those charged with garnets also you have to do, management also you have to do. If you find any, I'm telling you one summary, one single line summary of this entire standard, what the standard is actually trying to say. Thereafter we will see what and all. See, what is the prime objective of the standard I am saying. Ultimately, if I am saying what is the nose, I will point it like this. But the standard will point it like this. They will take the hand all the way around and they will point the nose. That's the only difference. So if I have straightly point to the nose, what is it is? It simply says that, the standard simply says that if there is a significant deficiency in internal control, you have to communicate that with management and those charged with garnets. If it is a normal deficiency, if it is not a significant deficiency, if it is a normal deficiency, just to communicate with the management, it will be enough. This is what the final sentence, which is the standard, is saying. But they try to say it in an elaborated manner. Let us try to understand. First of all, what is a deficiency in internal control? See, this entire standard is talking about deficiency in internal control. No. First thing, what is the meaning of deficiency in internal control? Simply, if I have to put it, there is a control which is designed by the entity, implemented, and even operated also. There is a control existing in the client organization. But it is designed, implemented, or operated in such a way that it is unable to prevent, detect, or correct the misstatement. That means control is ineffective. There is a control which is designed, implemented, or operated in such a way that it is unable to prevent or detect or correct a misstatement. That means control has been implemented in the organization, but it is unable to prevent or correct or detect a misstatement. Failure of the internal control system. Or control itself is missing. Either control is there, unable to prevent, detect, or correct a misstatement, or control itself is not there, sir. Both will be covered under deficiency in internal control system. So then what is a significant deficiency? Okay, this is deficiency. Now what is a significant deficiency? If the deficiency or combination of deficiencies is so big that it will merit the attention of those charged with garnants, that we call them as significant deficiency. If a single deficiency or a combination of deficiencies, if is so big enough, if it is of sufficient importance that you feel that it should be definitely taken to the attention of those charged with garnants, then it will be considered as significant deficiency. Then it will be considered as significant deficiency. Clear, everyone? Right. So we have understood what is deficiency, what is significant deficiency. Now you will get a doubt. Sir, you are saying any deficiency or combination of deficiency which is of sufficient importance to merit the attention of those charged with garnants, that will be called as significant deficiency. No? How you will decide it, sir? How you will decide it? Whether a deficiency will merit the attention of those charged with garnants to become significant deficiency or not? Who will decide it? Auditor himself will decide it. How he will decide it? By using his professional judgment, he will decide it. Simple, one single line. By using professional judgment, he will decide whether the deficiency is significant enough to merit the attention of those charged with garnants. He, using his professional judgment, he will decide. While taking that decision, he will consider some factors. While taking that decision, he will consider some factors. So what are the matters which he will consider in deciding whether a deficiency is a significant deficiency or not? So these are the matters. Likelihood of the deficiencies. What is the likelihood of it? Susceptibility of loss or fraud of related asset or liability. How much is susceptible that related asset or liability is subject to loss or fraud. Subjectivity or complexity of estimated amounts. If the amounts which are required to be estimated are more subjective, more complex, more it will be a significant deficiency. Financial statements amounts exposed to the deficiency. How much amount is exposed to the deficiency? Lesser the amount, it will not be a significant deficiency. Higher amount is exposed to the deficiency, it could be a significant deficiency. Volume of activity exposed to deficiency. There is a deficiency in internal control, but volume of transactions which pass through that internal control is very, very less. Not a significant deficiency. There is a deficiency in such an internal control where each and every transaction will pass through. Significant deficiency. So all these matters will auditor will consider, then he will decide whether a deficiency is a significant deficiency or not. Next, sir, will there be any indicators of significant deficiencies? Yes, there will be numerous indicators which will give a hint to the auditor that there will be significant deficiency. What are they? Ineffective aspects of the control environment. The client's control environment is not good. They don't have good culture. They don't have ethical values. Management is not having integrity. Or if you see some examples of ineffective internal control environment, significant transactions in which management is financially interested. So management is doing such a transactions where they are having the interest. Or identification of management fraud. You are able to identify that management itself has been engaged in the fraud. Or no remedial actions for significant deficiencies. Even after finding out the deficiencies also, they are not taking any action. All this clearly indicate that they have ineffective control environment. Whenever there is an ineffective control environment, it is a clear indicator that there could be a significant deficiency. Or absence of or ineffective risk assessment. Management is not doing a risk assessment process. They are not studying their organization. If at all they are doing it, it is very ineffective. Ineffective response to identified signified risk. Even after identifying the significant risks also, they are not taking any appropriate responses. Misstatements not prevented, detected, or corrected by internal controls. There are some misstatements which are not prevented, detected, or corrected by internal controls. Disclosure of fraud or error as prior period item. In the current year, there is a fraud. In the current period, there is an error, but the management is not disclosing it as a current item. In order to hide it, they are showing it as a prior period item. Significant deficiency. Management inability to oversee the preparation of financial statements. That means management is unable to monitor the financial statement reporting process. So these are all the examples of significant deficiencies. So what we have seen till now, we have seen what is the meaning of deficiency in internal control, what is a significant deficiency, what matters auditor will consider in determining whether deficiency is a significant deficiency or not, what are the examples of the indicators that give a hint that there could be a significant deficiency. Thereafter, communication. Sir, how you have to communicate. This is what the first point I have told will come into picture. In case if you find any significant deficiencies, that is required to be communicated with those charged with garnants. And what you will communicate with management, significant deficiencies that you want to communicate with those charged with governance, that you have to communicate with management also, unless it is inappropriate. So whatever significant deficiencies that you are communicating with those charged with governance, those significant deficiencies you have to communicate with management, unless you feel it is inappropriate. If you feel that if I communicate this significant deficiency with the management, it will be inappropriate, then don't do it. Directly communicate with those charged with governance. If it is appropriate, communicate significant deficiency with management also, those charged with governance also. And whatever other deficiencies we have, other than significant deficiencies, whatever other deficiencies we have, that will communicate only with the management. Next, in your communication, whatever communication you are doing regarding significant deficiencies, what and all you should include, you should give a description of deficiencies, what and all deficiencies you have identified, that you have to describe along with their potential effects. And you should also include some information which will enable those charged with governance to understand the context of the communication. So when you are communicating significant deficiencies with those charged with governance, don't just tell these are the list of significant deficiencies, this is their impact. Even provide them context also. You have to give them sufficient information to enable them to understand in what context you are doing the communication. That extra information also you provide. Sir, what kind of extra information I have to provide? That they are saying it in the next paragraph. In particular, the auditor shall explain what is the purpose of audit. You have to say that purpose of audit is to express an opinion. I am not doing audit for verifying internal controls, but my purpose is to do the audit. In that process, I got to know about some deficiencies. So you should include in that communication, sir, my purpose of audit is to express an opinion on the financial statements. Audit is not for the purpose of expressing opinion on internal controls. In that process, I got to know about these weaknesses that I am reporting. There could be other deficiencies also. I am reporting only those deficiencies which I have identified. There could be some deficiencies which might not come to my notice also. These are the deficiencies only which I have got to know in the process of audit. There could be other deficiencies also. Particularly this information you have to add so that those charged with governance will understand the purpose of your communication also. Clear? Understood? So this is what regarding SA 265. So we have completed 260 also, 265 also we have completed. Now one more thing we will do, SA 450 we will try to do. There is one more small standard, SA 450 we have, that also we'll try to do. Right. So what is SA 450 talking about? SA 450 is talking about evaluation of misstatements identified during the audit. Evaluation of misstatements identified during the audit. So during the process of the audit, when you perform audit procedures, you will identify the misstatements. No, whatever misstatements that you have identified, all that misstatements you have to evaluate. You have to analyze the misstatements. You have to whatever you have identified. So I will tell you one simple process here. What exactly the standard says is, first I will give you overall structure. With that background, if you read, that will make more sense. So as an auditor, what you will do, you will perform audit procedures. You will perform audit procedures. By doing that audit procedures, what you will do, you will find out misstatements. You will identify misstatements. Those misstatements, whatever you have identified, that we call it as identified misstatements. You will perform audit during the course of audit, you will perform audit procedures. So by performing audit procedures, you will identify some misstatements. So those misstatements, whatever you have identified, that we call them as identified misstatements. Now, the moment you have identified misstatements, you will not directly modify. You will not behave like a psycho there. The moment you have identified the misstatements, don't jump saying that. Don't jump and say that I have identified the misstatements, I will give a modified opinion. No, don't do it. See, once you have identified the misstatements, what you should do is you have to communicate it. Once you have identified the misstatements, you have to communicate them to the management and give them an opportunity to correct. When you are identifying the misstatements, don't directly, just because you have identified the misstatements, don't immediately jump and say that I have identified the misstatements, I will evaluate whether they are material and pervasive, I will give the modified opinion. No, don't do it. So whenever you have identified the misstatements, first step what you do is you give the opportunity to the management to rectify their mistakes. So that's why communicate them first. Communicate them with the management and give them an opportunity to correct it. So once you have communicated the misstatements, the management could have corrected the misstatements. So management corrected all misstatements. The management has corrected all misstatements. Well and good. If the management has corrected all the misstatements, check whether they have done the correction properly or not, and no need to give unmodified opinion. Be a kind person. Why to behave like a psycho, as I've told? So be a kind person. You can give here unmodified opinion only when the management has corrected all misstatements. But the management did not correct some misstatements. So when I say misstatements are not corrected, uncorrected misstatements, so what I mean here is, when I have identified the misstatements, when I have communicated to them, management could have corrected a few misstatements, some misstatements could have been uncorrected, or management did not correct a single misstatement also. Anything could happen. Anything could happen. So once I have communicated misstatements to the management, either they might correct full misstatements, or some they will correct, some they will not correct, or anything they will not correct. So whatever it is, once after communication to the management, you will be left with some uncorrected misstatements. You will be left with some uncorrected misstatements. So now these uncorrected misstatements you have to analyze. These uncorrected misstatements you have to compare it with the materiality level. Compare it with materiality level. Determine their materiality, or let me put it this way. Whatever uncorrected misstatements are there, those uncorrected misstatements you have to check whether they are material or not. In case those uncorrected misstatements are material and pervasive, then you have to proceed ahead and give the modified opinion. So modified opinion should come here, not directly here. Okay, so this is what the process you have to follow. So this background, this context, if you are able to get it, SA 450 will become very easy. So as an auditor, you will perform audit procedures. By performing the audit procedures, you will identify the misstatements. Just because you identify the misstatement, don't immediately jump and give the modified opinion. So what you do, communicate with the management, give them an opportunity to correct them. So they could do two things. Either they could correct all misstatements. If they're correcting all misstatements, well and good. If they're uncorrecting some misstatements, identify what are that uncorrected misstatements. Now you that compare it to the materiality level. If they have exceeded the materiality level, then you consider modifying the opinion. Understood? Clear? Right. So this is the context of SA 450. In this context, if we read the standard, now the standard will start making more sense. Let us see now what they're trying to say here. I think SA 450, I don't have summary. I will try to cover it from the standard. So what is the objective of this SA 450? As I have told, the objective of the auditor is to evaluate. You have to analyze. What you have to analyze? You have to analyze the effect of identified misstatements also. You have to analyze the effect of uncorrected misstatements also. So I told you what is the meaning of identified misstatement, what is the meaning of uncorrected misstatements. Both their effect you have to evaluate. That's what the objective. Accumulation of misstatements identified during the audit. See, before you communicate, don't communicate misstatement one by one. Accumulate all the identified misstatements, then you communicate with the management. Okay, so that's what they say here. The auditor shall communicate all misstatements identified. Don't separate and see it. Accumulate all the misstatements, whatever you have identified, clearly other than those which are trivial. If some misstatement is there which is clearly trivial means what? Which is not at all bother your attention. Very small misstatements are there that you ignore, that you don't consider. Whatever misstatements that are not clearly trivial means what? You need not pay any attention to it. So those trivial misstatements you ignore. Other than trivial misstatements, whatever some major misstatements are there, major in the sense reasonable size of misstatements are there, all that you have to accumulate and communicate it with the management. And you have to keep one thing in mind. This misstatement, whatever I am saying here, that misstatement can arise because of variety of factors. Misstatement can happen because of multiple reasons. Now, consideration of identified misstatements as the audit progresses. See, throughout the audit, you have to consider the identified misstatement. At the beginning, we decide our audit strategy. We decide our audit plan. According to that, we start performing audit procedures. Now, when we have actually started performing audit procedures, we identify misstatements. On the basis of that identified misstatements, sometimes you need to change your audit strategy and plan. Quite possible, Initially, we decide our audit strategy, audit plan, audit program. We continue doing the audit. As a part of the audit, we perform audit procedures. From that procedures, we identified misstatement. Now evaluate, because of this misstatements, whatever you have identified, is there any requirement to change your audit strategy, planning and program? Is there any requirement to make changes to your nature, timing and extent of audit procedures? Evaluate that. So this is what the meaning of consideration of identified misstatements as and when the audit progresses. Throughout the audit, you have to remain alert to that identified misstatements. So that's what they say. The auditor shall determine whether overall audit strategy and plan need to be revised. Why? If the nature of identified misstatements and circumstances of their occurrence indicate that other misstatements may exist, that could be material. If you are feeling that, okay, I have identified this misstatement. This misstatement is such a nature that it is not a standalone. Like this, so many other misstatements could happen. This you now got to know about it. Since depending on this misstatement, you are finding that there could be other misstatements also. You have to increase your testing. You have to make changes to your audit strategy, planning and program. Give more time for that concerned area. Now, once you find a misstatement, and one more case where you are required to revise your audit strategy and plan is when you find that audit approaches, whatever misstatements you have identified, that aggregate is approaching closer to materiality level. That means you have verified the transactions on sampling basis. On sampling basis only you have identified the misstatements. On sample only you have identified misstatements which are approaching approaching materiality. Let us say you kept 1 crore as materiality level. On the basis of sample, you have done the verification. Now, on the basis of sample only, identified misstatements are coming closer to 95 lakhs. Did not reach, but close. See, on sample only, if you are coming to close, if you increase your sample size, increase the audit program, might be the misstatement size cross materiality and you might give modified opinion. So like this, in these two circumstances, you might be required to make changes to your audit plan and audit strategy. You might be required to revise your audit strategy and audit plan. When, sir? When the nature of identified misstatements is indicate that other misstatements could occur, which could be material, or the aggregate of the misstatements identified is approaching the materiality level determined in accordance with SA 320. Next, the auditor may request the management to examine. So in case if you have identified a misstatement, if you feel that there could be repetitive in nature, you can go and request the management to understand the cause of the misstatement and make appropriate adjustments. If you feel that a misstatement is of repetitive nature, go and tell the management, sir, this misstatement is feeling repetitive, understand the reason and make appropriate adjustments also. If at the auditor's request, management has examined and corrected, check whether they have done the corrections properly or not. And even after the corrections also, if any other additional misstatements remain, that also you try to verify it. Next, communication and correction of misstatements. As I have told, the auditor shall communicate on a timely basis all the misstatements whatever you have identified, unless prohibited by law or regulation. If there is a prohibition from law or regulation to not communicate that misstatements with the management, then don't communicate. If there is no prohibition from law or regulation, whatever misstatements you have identified, that on a timely basis you have to communicate with those charged with governance or management. Then, and you should request, after communication, you should request the management to correct. Give them an opportunity. Sir, I identified these misstatements. Please do correct them. Sir, why communication of misstatements is important? Why? Because if you communicate the misstatements, then the management will tell you whether it is actually a misstatement or not. Sometimes we might be under a mistake. No, a item is not a misstatement, but we might get wrong conclusion. So that's why don't immediately jump to the conclusion. If you communicate with the management, they will let you know. They will tell you their point of view so that you can take better call whether that is a misstatement or not. And one more advantage, what will happen if you communicate that misstatements to the management is they will take rectification action, they will take corrective actions, and they will make sure that in the future same kind of misstatements will not happen. So those are the two advantages. So you might get a doubt, sir, if I identified the misstatements, no, directly I can give modified opinion. No, why I have to spend the time on communicating with the management? You have to do it, my dear friends. Why? Because if you communicate, that will help you to understand better about that misstatement, and you are also giving the management an opportunity to maintain the accurate accounting records. Sir, I communicated, but the management is refusing. Management is not doing the correction. Then you ask the management to give a reasons, understand the reason why the management is not correcting it, and ask them to give a written representation that they are not correcting the misstatements because they are not considering them as material. They will give some reason. Ask the management to give a written statement why they are not correcting it. Now you will be left with uncorrected misstatements. Now these uncorrected misstatements you have to evaluate. So before you are evaluating the uncorrected misstatements, reassess the materiality once. So you have communicated with the management has corrected. Now some uncorrected misstatements you are left out. These uncorrected misstatements you have to evaluate. So before evaluating that uncorrected misstatements, check whatever materiality level that you have decided at the beginning of the audit, is that still valid, or there is a requirement to reassess your materiality level, that you check it once. So in case if there is a requirement to reassess the materiality level, reassess the materiality, then evaluate. If there is no requirement to reassess the materiality, directly continue ahead and evaluate the uncorrected misstatements. So auditor shall determine whether uncorrected misstatements are material. So while making that decision whether misstatements are material or not, definitely will pay attention to the size and nature of the misstatements. And also you will consider whether there are any misstatements related to prior period. So we'll do all that consideration and determine whether misstatements are material or not. And even before you modify your opinion, you can do one more thing. You communicated the misstatements to the management, but they are not correcting it. One more option you give, communicate with those charged with governance also. Sir, we have identified misstatements, we communicated with your management, but they are not correcting it, sir. You can give one more option to them, go and communicate with those charged with governance also. So the auditor shall communicate with those charged with governance regarding uncorrected misstatements, here also unless prohibited by law or regulation. And the auditor's communication shall identify material uncorrected misstatements individually. When you are correcting those charged with governance, tell them misstatements individually, and you should request them uncorrected misstatements be corrected. Sir, your management is not doing it, at least you give the instruction for the management to correct it. And the auditor shall also communicate effect of uncorrected misstatements related to prior period. If you are able to find any misstatements related to prior period, that also you communicate with them. And also you should obtain written representation from the management regarding effect of uncorrected misstatements. This point I have already covered. In case if you are communicating to the management but they are not correcting it, ask the management to give a written representation why they are not correcting that material misstatements. And then finally, documentation also you are required to do. So what misstatements you have identified, what you have communicated, what are corrected, what are uncorrected, everything you try to keep it in your audit documentation as well. Understood? Right. So this is what regarding communication. This is what regarding SA 450. Clear everyone? Able to understand? So we are done with SA 450 also. Clear? Right. Now, what we are left with in 200 series, two more standards we are left with. SA 220 and SQC1. Both are talking about quality control. SA 220 and SQC1 we are left with. Both are talking about quality control. So I think we have spent a significant amount of time here. I'm going to end the live stream now. So I will wind up this live stream of SA revision here. Remaining two standards are there, SA 200 and SA 220 and SQC1. These two standards are there which are talking about quality control. That I will do the recording and I will upload it on the YouTube. Okay, so I'm ending the live session now. So after completing SA 220 and SQC1 also, I will do the upload. So it's already time now. Okay, so now we'll try to revise two more standards. So we'll try to start with SQC1. See, in the introduction part, I have already told you what does this SQC1 deal about. So as we have mentioned, there are different kinds of engagements which chartered accountants will do, be it audit engagement, be it review engagement, be it assurance engagement, be it agreed upon procedures. In all the engagements, whatever we are doing, we are required to maintain the quality. And how we could maintain that quality, sir? Even for that also we are getting the assistance, and that assistance we are getting in the form of SQC1. So SQC1 is a standard which is going to help us out in order to maintain the quality for all engagements, not just audit. Whether we might be doing audit engagement, or we might be doing a review engagement, we might be doing an assurance engagement, or we might be doing a related services. So whatever engagement we are doing, how to maintain the quality control. How to maintain quality control, that's what SQC1 is giving us the guidance about. So what does SQC1 say? Now, if I directly come to the point here, SQC1 says that if you want to maintain the quality in whatever engagement you are doing, be it audit, be it review, be it assurance, or be it related services, whatever engagement you are doing, if you want to maintain the quality, if you want to control the quality in the engagement, you need to maintain some policies and procedures. You need to follow some policies and procedures. And those policies and procedures are required to be implemented in 6 areas. Listen carefully. This is the crux of the standard. If you want to maintain, if you want to do quality control in all kinds of engagements you are doing, then what simply SQC1 says is you need to follow some policies and procedures. And those policies and procedures are required to be implemented in 6 areas. What are that 6 areas? Number 1, you should have some policies and procedures with regard to the leadership responsibility for maintaining quality within the firm. You should have some policies and procedures with regard to the ethical requirements. You should have some policies regarding acceptance and continuation of client relationship. In the area of human resources, you should follow some policies and procedures. You should also follow some policies and procedures in engagement performance and also during monitoring. So these 6 aspects only we call it as elements of system of quality control. So listen here, in order to maintain quality control, what SQC1 says, we need to follow some policies and procedures. In which areas we need to follow some policies and procedures? 6 areas of the firm, at the overall firm level, as a firm as a whole. If you want to maintain quality, in 6 areas, you need to follow some policies and procedures. What are that 6 areas, my dear students? Leadership responsibilities for quality within the firm, ethical requirements, acceptance and continuation of client relationship and specific engagements, human resources, engagement performance, monitoring. So these are 6 different areas where you need to maintain the policies and procedures. Sir, what kind of policies I have to follow in each of this area? That's what each paragraph will talk about. That's what each paragraph is going to talk about. So what kind of policies and procedures you have to follow in the area of leadership responsibility? What policies and procedures you have to follow in case of ethical requirements? What policies and procedures you have to follow when you are accepting and when you are taking a decision regarding acceptance and continuation of client relationship? What policies you are required to follow in case of conflict? What policies you have to follow in case of human resources? What kind of policies you are required to follow in engagement performance? What kind of policies you are required to follow in case of monitoring? Okay, so one by one we'll try to cover. So first of all, coming to the leadership responsibility. If you want to maintain the quality in all the engagements you are doing, someone should come forward and take the leadership responsibility. So in the overall firm level, who is that appropriate person who should come forward and take the leadership responsibility? So they say that there will be CEO of the firm, or there will be firm's managing partner. That person should assume the ultimate responsibility for firm's system of quality control. So just like that, if you want to maintain quality, that is not going to happen. So if you want to maintain the quality in all the engagements you are doing, someone should come forward and take the leadership responsibility. Okay, whatever work our firm is doing, in that we will maintain quality. I will take the leadership of that. Someone should come and take the leadership responsibility. Who is the appropriate person to take that leadership responsibility? Either firm's chief executive officer or firm's managing partner. And one more policy which you have to follow is you have to promote an internal culture. A good culture you have to promote where everybody will realize that quality is essential in all the engagements you are doing. And as a leadership, you have to set the example for rest of the people. Like a CEO, like a managing partner, you have to behave in such a manner that it is setting example for the rest of your team. And further, the person to whom the responsibilities are getting assigned. Okay, as a CEO of the firm, as a managing partner of the firm, I am taking leadership responsibility. If I am qualified, it alone will not be enough. Even the people to whom I am giving the executive responsibility, like other partners and all, managers, even those people to whom you are assigning the operational responsibilities, they should also have sufficient and appropriate experience, ability, and necessary authority. So these are the policies which you need to have in the area of leadership responsibility. So very simple. There should be a good internal culture, and CEO or managing partner should take up the leadership responsibility. They should set good example in the firm, and the person to whom they are assigning the operational responsibility, they should also have appropriate experience, ability, and the necessary authority to assume that responsibility. That's it. Next, ethical requirements. In the area of ethical requirements also, you have to follow some policies and procedures. Sir, what are they? As we all are aware, we have 5 ethical requirements. What are the 5 ethical requirements? Integrity, objectivity, professional competence, due care, confidentiality, professional skepticism. Long ago, we have learned it as a part of our ethics and the terms of engagement. So there are 5 fundamental principles, and as a firm you should have some policies and procedures to make sure that everybody in the firm, that the firm and all their personnel is complying with all the ethical requirements. So as a firm, you have to follow some policies and procedures which will make sure that the firm as a whole and personnel in that firm, everybody is complying with these 5 ethical requirements. What are that 5? Integrity, objectivity, confidentiality, professional competence, and due care and professional behavior. In addition to that, they are also required to make sure that independence is there in all the engagements. The firm should make sure that they are observing the independence in all the engagements. Sir, who and all should be independent? The firm should be independent, its personnel should be independent, including experts. If they are including any experts for that engagements, even that experts are also required to be independent. So everybody should maintain the independence. And how they will maintain that independence? What they should do to make sure that everybody is independent? Number 1, first step, communicate to each and every personnel that importance of the independence requirement. You identify and evaluate the circumstances which create a threat to that independence. Like we have 5 threats to independence. So identify relationships or circumstances which are creating that threat to the independence, and make sure that in case if any threat is identified, try to eliminate that threat. If you are unable to eliminate that threat, withdraw from the engagements. So this also we have seen in ethics and terms of engagement. So this paragraph says, as a firm, you should make sure that everybody is complying with 5 ethical requirements. Everybody is complying with the independence. How can I make sure that independence is getting complied? Communicate, identify relationships which create a threat to independence, and try to eliminate the threats. If it is not possible to eliminate the threats, withdraw from the engagements. Next, there should exist a mechanism where engagement partners provide the firm with relevant information about client engagement and personnel of the firm, and notify the firm of all the circumstances and relationships. Not just the firm's managing partner and all, every engagement partner also, there should be a system. If at all an engagement partner is assigned to some engagement, if he finds any relationship which is creating a threat to independence, he should immediately come and inform it to the firm. Next, all breaches of independence should be promptly notified. If any breach of independence is there, that should be promptly notified to the firm. And at least annually, this is important point for MCQs, at least annually, at least once in a year, the firm should obtain written confirmation from its personnel that they have complied with the independence requirements. At least annually get the written confirmation from the members. Then, and also one more point here, when you are accepting and continuing the client relationship. Whenever you are accepting a new relationship with the client, or you are continuing an existing relationship with an existing client, before you take the decision of acceptance and continuation of client relationship, you are required to evaluate some factors. Just like that, any client is coming to you asking you to do the engagement, don't blindly accept. For example, last year client is coming current year also, and he's asking me to continue the engagement, then also don't blindly accept it. So before you take a decision whether to accept and continue that client relationship or not, you need to consider 3 factors. As per SQC1, 3 factors you are required to consider. So what are the 3 factors? You have to check integrity of the client, whether your client is honest or not. Competence, whether your client is, competence means your competence as a firm. Are you capable enough? Is your firm is having capabilities, time and resources to complete the engagement? Don't just blindly accept that without realizing whether you will be able to complete the engagement or not. Check your competence, and even check if you accept that engagement or continue that engagement, will you be in a position to comply with the ethical requirements. So as per SQC1, if a client is approaching you, asking you to accept an engagement or continue an engagement, 3 factors you are required to consider. What are they? Number 1, check the integrity of the client. Number 2, check the competence, whether are you in a position to complete the engagement or not, that you check it. And whether you will be in a position to comply with the ethical requirements or not, that also you are required to check it. And sir, you are asking me to check the integrity of the client. No, how I will get to know whether my client is having integrity or not? How can I decide? How can I decide whether my client is having integrity or not? You are asking me first factor to check whether my client is honest or not. How will I get to know, sir, whether my client is honest or not? So some examples they are giving. What matters you all consider to know whether your client is in having integrity or not? Check their identity. What kind of identity they are having? What kind of business reputation they are enjoying in the market? Check it. Nature of client's operations. What kind of business practices they are following? They are doing legal activities or illegal activities. Information concerning attitude of the client's principal owners. What kind of attitude client's owners are having? Their key managerial person, those charged with governance. What kind of attitude they are having regarding controls and accounting standards? Whether client is aggressively concerned with maintaining the firm's fees low. That is a bad intention. Client is always trying to keep your fees as low as possible. They are not good people. In indications of inappropriate limitation. Unnecessarily they are keeping a limitation on my scope. Restrictions on my work they are keeping. Indications that client might be involved in money laundering or other criminal activities, or reasons for proposed appointment. Why they have changed the previous auditor? Why they are appointing me now? So like that, consider all these factors. So first factor which you have to consider is integrity. And how will I get to know whether my client is having integrity or not? Consider these matters. With the help of these matters, you analyze whether you are having integrity or not, whether your client is having integrity or not. If at all there is any conflict between firm and the client. If there is any conflict between firm and the client, if any conflict is arising between the firm and the client, it should be properly resolved. Before accepting the engagement only, try to resolve the conflict. Keeping the conflict pending, don't accept any engagement. If any conflict is there on any point, be it fees, be it terms, be it responsibilities, be it rights, be it obligations, first to sort out that conflict, then only accept that engagement. Next, for example, sometimes what will happen is at the time of accepting the engagement, there will not be any conflict. But after obtaining the engagement, after accepting the engagement, you are obtaining some information that would have caused, have you known this information earlier, it would have caused you to decline an engagement. At the time of accepting engagement, I don't have any trouble. I accepted. Thereafter, I got to know some information. And I feel that had I known this information earlier, if somehow I got to know this information at the time of accepting, I would have declined that engagement. If such an information has come to you during the course of audit, then what you should do? Determine your professional and legal responsibilities. Check what kind of professional and legal responsibilities will apply to you, including whether there is a requirement for you to report this matter to the persons who made the appointment. And if possible, is there any requirement for withdrawing from the engagement? If you are required to withdraw from the engagement, is it possible now? Try to analyze these factors and try to take a call appropriately. Okay, so simple this paragraph. If there is a conflict, before accepting only resolve it, then only accept. After accepting, if any conflict comes, or if you feel that if I had known this information earlier, I would have declined the engagement. Such an information you got to know about it now. Now what you should do? Determine your professional and legal responsibilities. Report to the persons who made the appointment. Check whether it is possible to withdraw from the engagement. If possible, withdraw. Next. In the area of human resources also, you need to follow some policies and procedures. In your HR department also, you need to follow some policies and procedures. Sir, what kind of policies? Those policies should give me reasonable assurance that yes, I have sufficient personnel and all my people are having enough of capabilities, competence, and even they are all committed to ethical principles. Those kind of policies you have to comply with in HR department. And those policies might be in the area of recruitment. At the time of recruitment only have some policies, which kind of people you will recruit. Compensation, while designing the compensation to them, at that time also follow some procedures. Training, after they have joined, keep some policies for training. Career development, not just they have joined, you have to provide them opportunities for career development, even for performance evaluation. In all these areas, you need to have some policies and procedures. 4 areas we have covered. So what are the 4 areas we have covered? Leadership responsibility we have covered. Thereafter we have covered ethical requirements, acceptance and continuation of client relationship, and just now we have covered human resources. Then when the engagements are getting actually performed, when the actual engagement performance is happening, at that point of time also you need to implement some policies and procedures at the stage of engagement performance. Like what, sir? So you should follow some policies where there should be briefing of engagement teams. Just like that, don't call your engagement team and ask them to do the audit. Give them proper briefing. Process for complying with engagement standards. What process they have to follow in order to comply with the engagement standards. Process of engagement supervision and training. So give them follow some policies for providing them training. Methods of reviewing. So have some policies for reviewing their work. Don't just blindly believe, and give them instructions for maintaining proper documentation. In case if there is any difficult or contentious matter during the course of audit, if any difficult matters comes, if any complex matter comes, take consultation. If you have internal expert, take internal expert consultation. In case if you don't have internally any expert, take the help of outside firm who have specialized expertise. Okay. Next, And also they can take, in case if they want to take external consultancy, they take advantage of advisory services. Today so many expert firms are there which are providing advisory services. If you are an audit firm, if you have come across complex matter, if you don't have any internal expert to resolve this problem, you can go to another firm. They will charge you some fees and they will help you out. So take the assistance of that advisory services. Whatever significant judgments are there which are made during the audit, they must be reviewed by engagement quality control reviewer. In case of listed companies, there will be one process called engagement quality control review. That means after you have done the audit, before you give your opinion, before you prepare your report, within the firm there will be a person called engagement quality control reviewer. He will check what and all significant judgments you have made during the audit. After review by the EQCR, then only final audit report will be issued. That is mandatory in the case of listed companies only. When you are conducting audit of listed companies, there is one process called EQCR, engagement quality control review. That means a person who is not a part of the engagement team, like that one person will come within the firm only. One engagement quality control reviewer will be appointed who is not part of engagement team. Now first engagement team will do the audit, they will perform audit procedures, they will have observations, they will make judgments. Before giving the audit report, what this engagement quality control reviewer will do is he will check whatever judgments you have made during the audit, whether they are appropriate or not. So like that, in case if you are conducting audit of listed company, all the significant judgments made during the audit should be reviewed by a person called engagement quality control reviewer. Just because review is happening, will there be reduction of responsibilities of the engagement partner? No. Still, even though engagement team has conducted the audit, even though EQCR has done the review, thereafter if the auditor's opinion goes wrong, who will be held responsible? Will EQCR be held responsible or engagement partner? Engagement partner only will be held responsible. Next, this point I have already told. Engagement quality control review is mandatory for all audits of items of financial statements of listed entities. For audit of listed entities only, this process engagement quality control review is mandatory. If there is any difference of opinion between whom, sir? Among the members of the engagement team, if there is a difference of opinion, or if there is a difference between engagement partner and engagement quality control reviewer, engagement partner done the audit, then the review was taken up by EQCR. Between them, there is a difference of opinion that should be resolved. Sit together and resolve that differences. In case engagement quality control reviewer has given some recommendation and engagement partner did not fulfill it, that means EQCR is giving recommendation but engagement partner is not fulfilling it, then there is a difference, no? So if you read this point, in case recommendations of engagement quality control reviewer are not accepted by the engagement partner and matter is not resolved to the reviewer's satisfaction, engagement quality control reviewer is saying something, engagement partner is not accepting to it and EQCR is not satisfied, then what will happen? The matter should be resolved by following the established procedure. That matter should be resolved. How it will be resolved? Generally in the firm there will be a policy. In case if there is a difference between engagement partner or engagement quality control reviewer, how this issue should be resolved. For example, company's policy says you have to go to the senior partner, whatever senior partner says that will be final. So like that every firm will have an established procedure for resolution, follow that procedure and resolve the matter. Next, besides, the firm should also have some policies and procedures to complete the assembly of the final engagement file. This we anyhow know within 60 days. In case of audit, within 60 days you are required to do the assembly of the final audit file. So that process you have to follow. And over that audit documentation, not just maintaining the audit file, that audit documentation should be maintained confidentially. It should be kept in safe custody. It should be maintained. Integrity should be over there. It should be accessible and it should be reviewable. Yeah, it should be retrievable. Sir, this audit documentation is whose property? This is auditor's property. This is firm's property. Are they under an obligation to share the copies of the documentation to either the client? No, they are under no obligation. They are at their discretion. If they want to share the documentation, they will share it. If they don't want to share, they will not share it. And this audit documentation should be retained. No, sir. Yes. For how long it has to be retained? In case of audit, it has to be retained for no shorter than 7 years. All these points we know, we have seen in different chapters. So this is the policies and procedures which you need to have in the area of engagement performance. Now finally, monitoring. So just having the policies and procedures will not be enough. Whatever policies and procedures which you have implemented in the above 6 areas, whether they are getting implemented, whether they are relevant, whether they are adequate, whether they are operating effectively, whether they are complied within practice or not, that periodical monitoring also you are required to do. So just implementation alone will not be enough. Even monitoring will also be required. Now, on the same lines, we will also try to cover SA 220. So now what is this SA 220? SA 220 will also talk about quality control. Sir, SQC1 is also talking about quality control. Now we are saying SA 220 is also talking about quality control. What is the difference between the two? The difference is very simple, my dear students. When it comes to SQC1, it is talking about how to maintain quality control in all kinds of engagements. It is a firm level quality control standard. It is a firm level quality control standard. as a firm, in all the engagements, whatever you are doing, how to maintain the quality. So firm level quality control standard is SQC1. Whereas SA 220 will talk about how to maintain quality control at the engagement level in case if you are conducting an audit engagement, only for audit engagement. So in case if you are conducting an audit engagement, how to maintain the quality at this audit engagement, that means at the engagement level, how to maintain the quality, that is what SA 220 is talking about. And practically speaking, this SA 220 has been drafted in line with SQC1 only. SA 220 has been drafted in line with SQC1 only. So that is what SA 220. It is also going to talk about quality control, but it will talk at the engagement level in case if you are conducting audit of the financial statements at that particular engagement, how to maintain the quality, that SA 220 will say. So here also same. Here also they say that in order to maintain the quality control, you need to follow some policies and procedures at the engagement level, at the audit level. At the audit engagement level also, if you want to maintain quality, you need to follow some policies and procedures. In how many areas, sir? Once again, the same 6 areas: leadership responsibility, ethical requirements, acceptance and continuation of client relationship, then assignment of engagement teams, nothing but HR, engagement performance, and then finally monitoring. Okay, so now let us see here what policies you should have. In case of engagement level, as per SA 220, here also someone should come forward and take the leadership responsibility. See, at the firm level, firm's managing partner or CEO will take responsibility. At the engagement level, who will come forward and take the leadership responsibility? Engagement partner. At the engagement level, who will take the leadership responsibility? Engagement partner. For particular engagement, engagement partner will take the leadership responsibility. For the overall firm, firm's managing partner or CEO will take the leadership responsibility. But at one particular engagement level, who will take the leadership responsibility for maintaining quality? Engagement partner. And just taking the responsibility alone will not be enough. You have to fulfill. How you have to fulfill? The actions of the engagement partner and appropriate messages should always emphasize, should always highlight importance of audit quality. So as an engagement partner, whatever actions you are doing, whatever messages you are conveying, in all that you have to convey, you have to emphasize how much important the quality of audit is. And you have to highlight that performing work that complies with professional standards and regulatory requirements is how much important. You should tell them how important it is to comply with the firm's quality control policies. You tell them how it is important to issue the audit reports that are appropriate. You have to emphasize how important it is to ability to raise the concerns. They should be able to raise their concerns or problems without any fear. And also you have to always highlight that fact that quality is essential in performing the engagements. So these leadership responsibilities, policies you should have. Then ethical requirements, here also same. In case of engagement, in case of audit engagement also, you have to make sure that you are complying with ethical requirements. And here also, if you find any threat to independence, that you have to apply safeguards to eliminate it. And in case if you are an engagement partner, if you are a particular engagement partner, if you are doing some engagement, if you are engagement partner to one particular engagement, if you find any threat to independence, it is your responsibility to communicate about that breach of independence or threat to independence with relevant persons within the firm. This point we have already covered in SQC1. There we told from the firm perspective. There should be a system where engagement partners should communicate with the relevant members of the engagement, relevant members of the firm about any threats to independence and all. No, that they are replicating it here. Okay, so as an engagement partner, you have to report to the relevant persons within the firm to determine appropriate action. If you find any threat, communicate with the firm, with the relevant persons, what action you have to take to eliminate that threat, so that you have to do it. Acceptance and continuation of client relationship, it is also very much similar. Before you are accepting any audit engagement, specifically you are accepting any audit engagement, here also you have to consider some factors. What are they? Integrity, competence, compliance with ethical requirements. These three are common with SQC1. In SQC1 also we have the same 3 points. In addition to that, they are saying one more point: significant matters arisen during current or previous audit engagement and their implications. That means in case if for the same client, if you have done any engagement in the past, you consider significant matters which have arisen during the previous or current engagement also. Consider significant matters of past assignments also before accepting or continuing client relationship. So these 3 will be common as per SQC1. One point will get added: before accepting and continuing client relationship, significant matters arisen during previous or current audit engagement. So assignment of engagement teams, you have to properly assign your teams, which is nothing but once again related to HR area only. So you have to assign proper engagement teams, and if required, you have to take the help of the experts, and those people you have to select in your engagement team who are competent, who have enough of competence, that is capabilities. Next, engagement performance. When you are actually performing the engagement also, you have to follow some policies and procedures. Like what are they? As an engagement partner, you are responsible for providing direction. You are required to supervise the work of your engagement team, and even you are required to review their work also. It's also you're also required to review their work. And not just that, ultimately you are the person who is responsible for giving the report So that's why you have to do the review of audit documentation. You have to check whether your engagement team is maintaining proper documentation or not, whether they have obtained sufficient and appropriate audit evidence or not. And he is also responsible for ensuring undertaking appropriate consultation. In case if any difficult matters have come during the course of audit, it will be responsibility of engagement partner to take consultation. This point anyhow we have covered in SQC1. Once again, repetition. If any difficult or contentious matters comes, you have to take the consultation either within the firm or outside of the firm. And this point I have told, in case of audit of financial statements, which process will become applicable? Engagement quality control review will become applicable. In case if you are conducting audit of the financial statements of a listed entity, EQCR will become applicable. Engagement quality control review will become applicable. So that's why in case if you are conducting audit of listed entity as an engagement partner, you shall determine whether engagement quality control reviewer has been appointed or not. You have to check it because you are engagement partner. No. So in case if you are an engagement partner, you have been assigned the audit of a listed company, you have some responsibilities. What are they? Check whether your firm has appointed EQCR or not. And you have to discuss as an engagement partner, you have to discuss significant matters arising during the engagement, including those identified during engagement quality control review with engagement quality control reviewer. Nothing but it is your responsibility to communicate significant matters with the engagement quality control reviewer and not date the auditor's report until completion of review. That means you have to mention the date of auditor's report only after completion of review, because in listed company EQCR is mandatory. So first review has to get completed, then only you can mention the date of auditor's report. Next, if there is any difference of opinion, I have already told you, if there is any difference of opinion, you have to get them consulted, you have to get them sorted. This point is same from SQC1. And finally, even at the engagement level also, you have to do the monitoring. Like the way we are doing the monitoring at the firm level, even at the engagement level also you have to do the monitoring, like whether the policies and procedures are getting implemented, whether they are relevant, adequate, whether they are operating effectively. And you have to consider the results, not just doing the monitoring and ignoring it. What are the results of that monitoring process? What changes you have done? What corrective actions you have done? So that results of the monitoring process also you have to consider. Next. So no, this point is firm will do monitoring. No, as per SQC1, firm will do monitoring. No. So whatever monitoring which is done by the firm, that report will be circulated to the engagement partners also. In that monitoring report, they will give some suggestions and all improvement that has to be adopted by the engagement partner also for his audit engagements. That's what they will say. So if you read it, the engagement partner shall consider the results of the firm's monitoring process as evidenced in the latest information circulated by the firm. At the firm level, monitoring will happen as per SQC1. After monitoring, the firm level report will be there. That report will be circulated to engagement partners. Whatever suggestions they have mentioned in that SQC1, in that monitoring process as per SQC1, that they have to adopt it at the engagement level also. And when it comes to monitoring, as an engagement partner, you should document the following matters. What are they? What issues you have identified with respect to compliance with ethical requirements and how you resolved them? What conclusions you have reached regarding compliance with independence requirements? How you have what conclusions you have reached regarding acceptance and continuation of client relationship? Nature and scope and conclusions resulting from that consultations. So all these things should form part of your documentation. Understood. So with this we have completed SQC1 and SA 220 also. So successfully we have completed revision of entire 500 series, 200 series along with SA 450 also we have completed. Okay.